Good morning. Good morning. Good morning. Good morning. Good morning. Good morning. I feel like I should be waving my arms, but start again. Good morning, everybody, and welcome. I'm Tim Davis from the Primary Markets team at the London Stock Exchange. I also head up our healthcare coverage. Delighted to see so many of you here today, both companies and investors, and also none of this would be possible without the support of our sponsors, Overy, FTI Consulting, JP Morgan Numis, and not forgetting our friends at the BIA and also the Department for Business and Trade. One little bit of housekeeping, if I may. Up there on the right, there is the address for Slido, I hope. Yes, it is there, I can't quite see. There's the address for Slido. Please do log on and ask away with questions via that medium. But also there will be handheld roving mics at the end of each session. And also the Minister, of whom more in a moment, I should say, is also hopefully going to have time to take a couple of questions as well. Also welcome to Lord Johnson. Good morning, Minister. Minister of State in the Department of Business and Trade, has a very long and distinguished background in financial services and has also started, built and sold businesses himself. And last but not least, a co-founder of Somerset Capital. Minister, thank you very much for joining us this morning.
Great. Well, thank you very much, Tim. That's very kind of you to... In fact, I'll stand here if that's all right. Can you hear me at the back? Yes, there's some nods. I did a speech the other day. I said, can you hear me at the back? And someone shouted, yes, no.
You got lapel on. Sorry, excuse me. It's just we're recording.
Oh, thank you very much. Very good, thank you. Sorry. There's something in the thick of it about this.
Yes.
There we go. Shall I put it in my pocket? That's great. Thanks very much. Sorry. Shall I tell the joke again? Does that? I think we slightly worn that one out. Are we recording now? Are we okay? Yes. I think we're there. That's great. So I came to the Stock Exchange about 8 months ago. It's my first day as a minister. And it's quite exciting. So, you wake up in the morning, you're very excited. You've got your red folder, you've got a car waiting for you. Sometimes, actually, most of the time, I take the ministerial tube. You can be glad we're keeping the cost down. And I launched the Stock Exchange. You press the button. We were launching a Saudi green bond. It's now the biggest green bond in the world. We started with 3 billion, and now we have, I think, 6.5 billion. A great example of why the London Stock Exchange leads the world, frankly, in terms of international global liquidity. And I pressed the start button, and the screens went blanket red, blood red. And I thought, my God, I've precipitated the next sort of financial crisis. And I remember that Winston Churchill, interestingly enough, he rang the bell on the day of the Wall Street crash. I don't know if any of you knew that. He was in the stock exchange. They said, would you be kind enough to open proceedings? And he rang the bell. And, of course, we know what happened after that. So I hope today this doesn't bode ill. But I want to say thank you to all of you for coming and listening to me. And I want to say that, hands up, by the way, if anyone's an investor in the room. Any investors? So there are quite a few of you. Well, I mean, I spent the last 30 years in investment, and I always say that I spent my time in global emerging markets. I don't know if anyone invests in global emerging markets in the room. No, there are some sensible shakes of the head. There's a nod over there. Well, in global emerging markets, you're always well, it's very difficult investing in global emerging markets. It's actually very difficult investing in general. There's always a political crisis. They're always changing leader. So I left global emerging markets and went into British politics. And all I can say is stay where you are if you want to change the world and create good, particularly if you're investing in life sciences. And I say this at the beginning, or really of every set of remarks that I can, that there is no more important act, there is no more noble endeavour than allocating capital to the highest point of return. And when I say that, everyone always goes deathly quiet, like I've said something that's slightly inappropriate. But we know that capitalism, that important act of moving capital to the highest point of return, is what creates the goods and services that literally, and in this room more specifically than ever anywhere else in this country, that literally leads us to have longer, happier lives. And I think we need to spend more time as individuals and as a government expanding the virtues of capitalism. Because without it, we're not going to solve the extraordinary challenges that we have today. And those challenges, I'm looking at so many excellent companies. Any entrepreneurs in the room, by the way? Any entrepreneurs in the room? Okay, so keep your hand up. I haven't said what you should keep your hand up for yet. Keep your hand up if you find it easy to be an entrepreneur. There are no hands up. There's a sort of semi-hand up there. The fact is, running a business, building a business, is extremely difficult. And I spent many years building businesses myself, being an entrepreneur. My worst business investment, I invested at 9 a.m. when I was called at 12 o'clock that day to be told that the business had gone bankrupt. So I think that's the fastest destruction of capital I've ever seen. But I've had some successes as well. But what I know is that journey of creating a business is extremely difficult. You have suppliers who don't supply on time. You have to hire people, which is extremely complicated and difficult. You have to deal with your investors, some of whom may be in this room, and and you have to deal with the government, by the way, which we know is extremely complicated. And worst of all, your partners and colleagues who make life so difficult. And what I want to say to you is I feel, as Bill Clinton said, I feel your pain. It's very hard building a business, but it's the most amazing and powerful thing that you can do as an individual, to go out, to leave the large company that you worked for, and to go out on your own and set something up and create, particularly when it comes to the life sciences sector, a new medicine, a new form of treatment, a new form of medtech. Is probably one of the most laudable and important acts anyone in this country can do today. So I congratulate you, and I want you to know that you have my support. Now, there are a number of challenges that you face as investors and as practitioners and entrepreneurs in this country. We have some philosophical ones, and I want to briefly talk about my daughter, Eliza, and James in the front. I don't know if you all know James. I think JP Morgan is sponsoring this conference, one of the best healthcare brokers in the country. As far as I'm told by him, so he knows he knows my daughter. But this is a huge philosophical challenge. So I was born in 1974, April the 6th. Anyone born on April the 6th, 1974? I have no twins. Anyone born on April the 6th? No, there are no. I never come across anyone who's been born on April the 6th, unfortunately. I'm born, and I went to school. I went to university. I left university. I then got a job. I bought a car. I was in the same job fundamentally for nearly 30 years. I got married. I bought a house. I had children. I'm going to retire, and then I'll die. And when you look at my life like that, it doesn't seem a very exciting proposition. But if I look at my daughter, who's 15 years old, she's been born, sure. She's going to school, and she'll be educated, but she'll be educated continually throughout her life. She'll probably have 3 or 4 different educational sections. She obviously won't get a job in the same way. She'll have 4 or 5 completely different careers. She's not going to drive. She'll have a car. She'll have different types of mobility. She'll have children. Much later, her marriage situation will probably be entirely different to how we conceived it. She may not be able to afford to buy a house, or in terms of how she lives, it'll be completely different. She probably won't retire, and there's a high chance that she won't die. So you have this extraordinary scenario where society has changed completely. And if we're to answer those extraordinary questions about our lifespans, then you in this audience and the government need to work very closely together. And I'm aware of the challenges that you face. I'm very concerned about the fact that we need to retain the status of being the top investment destination for healthcare in Europe, which we are. And for those of you in financial services, we need to retain the status of being the top investment destination for financial services in the world outside the US. We hear a lot of bad news about the UK, but the fact is we are best placed in the world in order to encourage your business model and to encourage the investment in these new ideas, to create them in the first place, to develop them, and then to commercialize them. But I'm very aware that the challenges that you face. I'm very aware of the issues that the government has to deal with. One of them is clearly around clinical trials in terms of getting your drugs tested and to market. I don't know if any of you have read the O'Shaughnessy review. Hands up if you've read the O'Shaughnessy review. So some of you have. Well, I recommend you all read it, because Lord O'Shaughnessy was a health minister. He's a great visionary, and he's put together a very clear template in terms of how we can reform the clinical trials system to ensure that you can quickly and effectively trial your drugs in order to commercialize them in this country. And the second issue, which is very important, which is around how we interact with the pharmaceutical companies in this country. And in my view, and I come to politics from business, we have rightly, since 1979, introduced a competition and regulatory authority concept across the board in this country. And that's power, it's water, it's transportation, it is in healthcare particularly, to try to get the price for the consumer as low as possible. So today's prices really are, across the board, whether you're buying water from the tap or power from the grid, we've tried to get prices as low as possible. And they are noble and worthy ambitions, and it's important governments do that. But in my view, the regulatory environment needs to evolve. And we need to see a focus brought to bear in terms of the framework of decision-making for regulators that looks at investment. And investment is the key. If we don't invest in you, we will not be able to solve the challenges that my daughter will face in her lifetime. So we're working at the Department for Business and Trade on a series of measures that will help us literally inject, like one of your mRNA vaccines, into the machine of Whitehall, how to bring investment to bear in terms of decision-making with the regulators and in terms of concepts such as VPAS to try to balance the importance of having lower pricing for pharmaceuticals today with the need for you to invest in the future. And we're also doing a whole range of other measures. People very rarely thank the government. Anyone thank the government recently? Hands up if you've... You thank the government. What did you thank the government for?
Silicon Valley Bank.
Well, thank you very much. That's great. That's great. Good. I'm glad. What did you thank the government for?
Increasing the threshold on SEIS.
Yes, this is great. I must get this audience together more often because I've never come across an audience so enthusiastic about what the government does. Another thanks to the government.
And I think what Rishi Sunak said in Birmingham, that his government will be defined by innovation, and that's just accelerated the whole concept.
Well, I'm very glad you say that because that's exactly right. Another one. We're starting to run thin on thanks to the government.
Innovate UK funding for small biotech companies.
This is absolutely true. And at the back, one last one.
Recognising the need for scale-up capital, plus the need for our pension funds to actually be long-term growth for their pension fund holders. That link's a really important link.
Well, thank you very much for mentioning that. So you have, this is a very helpful series of points. You have encapsulated exactly what we're trying to do. So we are trying to lead the way in terms of light a beacon for everyone in this country and everyone around the world to make the UK the #1 investment destination in the world after the United States. And the Prime Minister has a very clear and singular concept, which is to turn us into a science and technology superpower by 2030. And a lot of people, maybe the general public, don't necessarily lock onto that because we have current issues today in terms of cost of living crises and other issues, which are obviously very apparent and very relevant and important. But if we're going to solve our real problems, if we're going to have the national strength, the wealth and the security to survive into the future, it is all about our intellectual capital, our brains being really our best and only defence. And so we have a range of measures, and this is what I want to explain to you in the next minute or so. We have a range of measures to support you in terms of new measures that we're bringing to bear, such as lifts, which is £250 million specifically designed to help the fund management industry springboard the funds that can go into the defined contribution pension scheme and release all that money that currently is trapped. Andrew Griffiths, I don't know if any of you have met my colleague in the Treasury, is campaigning hard and working very effectively in order to slightly change how financial services are viewed, both by introducing competitiveness to the mandate of the PRA and the FCA, but also looking at how, and I think you mentioned at the back, how we release those literally trillions of pounds worth of assets stuck, sleeping. You can hear, if you listen carefully, you can hear them snoozing in the bank accounts of our large insurance funds and pension funds. And to change the culture and to look at the specific regulations as well. I know some of you here from small businesses who hope to list. Well, I spent, as I said, nearly 30 years in investment management, and I've struggled, and I've thought about it, and I'd like to know if anyone here can give me an answer. But can anyone come up with something useful that came out of MiFID II? Because what we did in terms of MiFID II was if you don't know it, you had small cap research, which was bundled into the cost of the investment management fees. And when you explain it to someone, they say, well, that seems a bit unreasonable. That's like going to a hotel and just getting a bill without your breakfast being itemised. What actually happened was we destroyed the small cap market. We seriously inhibited the opportunity for research to become cost effective in order to cover the whole broad plethora and ecosystem of the small cap sector. So we're changing that. So if you're thinking, what are we doing? We're doing a huge amount in terms of actually creating the environment to allow you to be hugely successful. And at the same time, making sure that there's money available in order to ensure that we have government support and we can partner with you. And then for the larger pharmaceutical companies, we're thinking very hard about how to attract investment, how to support them in terms of competing on an international stage and ensuring that in regulatory terms, we're bringing investment to bear in the decision-making process. And at the end, I'll just say one thing, which is about the strength of the United Kingdom in concept. I spent the last week talking to London Tech Week. Anyone been to London Tech Week? Yeah? They did a pitch in a pod, I saw, which is at the London Eye. So you would go and pitch to investors in a pod. It's a sort of elevator pitch extreme. I wasn't entirely sure what happened if you didn't succeed, whether you were pushed out at the top. But when you spend, as I have nearly every day for the last few days, with this extraordinary tech sector in the UK, you realise how powerful we are around the world. You know, we have a tech sector worth $1 trillion. It's the third biggest in the world after the US and China. And when we think of the reason why people come here, and I ask them all, why are you coming to the UK to set your business up? Because Tech Week is about attracting entrepreneurs and founders and tech businesses to the UK. And they say they love living in the UK. And they love the frameworks. We mustn't underestimate the importance of, frankly, our capitalist rule of law system that's so enormously powerful. But they're here for one key reason. Anyone know what that is? Well, I'm looking at it. It's the people in this country. And we're so well placed in order to leverage off that. It's so exciting when you have a chance to go to places like Harwell, or I come and see some of the life sciences businesses that are here. And if I look at our strengths, if I think of where we are placed, let's say in the top 10 universities in the country, we have 3, and in some measures 4, of the top 10 universities in the world. In the world. There are none in China. There are none in India. There are none in Africa. There are none in Latin America. Now, I don't think that's a good thing, by the way. I don't think that's a healthy thing for the world. But it is a fact. Not far off half of the top 10 universities in the whole world are here. And that's why you're here. You're here because of the people. So, in summary, I'd like to say that the government is doing everything we can to support you. We're trying to get the frameworks and structures right. We're trying to improve our regulation. We're very aware of the challenges that you face and we're willing to back that with our money. We're very keen to support the London Stock Exchange. We need a strong listing market. It's very important. It's vibrant. And having spent the last 30 years in global emerging markets asset management in London, I know there is nowhere else that has the ecosystem, the people, and the office space and infrastructure around that in order to make this sector a success. And in terms of my commitment to you, I'm available to you from 6 a.m. until midnight. If you're on LinkedIn, anyone LinkedIn with me, by the way, in the audience? Anyone LinkedIn? Couple of people at the back. Link in with me directly, and I'm happy to support you. The Department for Business and Trade, who've co-sponsored this excellent event. Hands up if you're from the Department of Business and Trade. No? There's one person. Okay, that's not the sort of line-up team, although Emily's very, very good. Normally when I go to these things, the whole audience put their hands up, and I realise I'm speaking only to Department of Business and Trade people. But we have nearly 1,000 people around the world to support you when it comes to exports, to support you when it comes to investment. Ronald Reagan had a great quote. The 9 most terrifying words in the English language are? Anyone know? Yes?
I'm from the government, I'm here to help you.
Well, I am from the government, and I am here to help. So thank you very much indeed for your time this morning. I'm delighted to answer some questions, and I look forward to seeing your companies being successful and your investments reaping fabulous returns. So thank you very much.
Minister, thanks very much. It's very easy in these more challenging times to overlook everything that you just reminded of that is there. Brilliant, thank you. Can we impose on your time just a few minutes more?
Yeah, I'd be delighted.
Questions? Gosh, it's very bright here at the front. Anybody got a question for the Minister? A microphone will hopefully find its way to you.
I'm always told that British audiences never ask questions, but I know that's
You've been
not the
very good
case.
at asking them questions.
I have. Maybe I should ask a question. So tell me, what's the biggest priority for you? What's your single most important priority the government can solve? Yes, and since you were so good on Ronald Reagan.
Our life science companies end up on NASDAQ rather than listing in the UK. And coming from the Cambridge ecosystem, I'm Prashant from O2H, a Receive Venture Fund. That's painful. So what can we do directly to help our companies list in the UK and get the capital that they need from the UK markets?
So that's a very good question. Hands up if anyone else thinks that's a relevant question. Yeah, I thought most of you do. And it's become a very perennial topic. I mean, we work extremely closely with the London Stock Exchange in order to promote this country as a base for listing. And we've had some successes in the last few weeks alone. We've had some fabulous companies coming to the UK, one from Turkey, one of the biggest aggregates businesses in the world, has now chosen this country to list. I spend a lot of time with London Tech Week, talking to international businesses, particularly from Korea, some of the new to Kazakhstan and Uzbekistan and so on, who are wanting to come to the UK because they see it as the international capital for listing. So we have to light the beacon. One, we have to ensure that the world knows that we intend to retain the top spot in Europe in terms of life sciences and pharma. We have to make sure there's enough money so that people can go from a fabulous EIS and SEIS startup and venture funding ecosystem, which I think has been enormously successful, and yet take on the next stage. It's a 250 million to sort of 750 million gap that I think needs to be filled. And I believe that concepts such as lifts can help us there by funding, again, growing the pools of capital. For me, it's all about growing pools of capital. And if we can encourage a further ecosystem, and that's what LIFTS is about. Interestingly, when I look at the documentation around LIFTS, the £250 million itself isn't a huge amount of money when you think of the billions that we need in order to achieve our goals. But the intention is not just to provide that money. It's not a grant of 250 million or investment capital. It is a seeding capital to provide us with the impetus to create the ecosystem of the people like James and his colleagues in other organisations, who can then bring companies to the city and to the UK and to make sure that they list here. One of the ideas I had was to create a special life sciences or bioscience or bioengineering sort of board, if you want to call it, separate listing pool. Actually, I don't think that's a very good idea, because what happens is that tends to get quite narrow. You want these to be main listed companies, you want to make sure that the ecosystem is here, and you want to make sure that internationally we shine a light on the opportunities that present themselves.
One more, if I may. Andy Richards at the back.
No, actually, you've covered it
Oh.
in relation to...
Thank you very much.
One more.
Let's be specific. So often our great companies have sold early, and that's often put down to lack of ambition or all sorts of things. Having been involved in many of those companies, it is not. It is a rational decision about the fact that the next level of capital to scale up and go up the value chain from discovery to development to own sales just won't be there in the London ecosystem. You end up going to Nasdaq, which always makes you more vulnerable to UK company to be sold, and so rationally those companies sell out early, and that's a tragedy for UK PLC. But you've covered it in relation to lifts.
Well, I'm happy to answer one more question after that. Our biggest asset is in National Health Service, and I don't think we make enough of it. Big Pharma comes here, they say to me, I say, why are you in the UK? They talk about the people and the framework and so on, but what they really say is that the NHS is a fantastic, in terms of data, homogenous test body that allows them to develop and ultimately, if they work properly with the NHS, to commercialise their pharmaceutical drugs and other technologies. But we have to work harder. I'm very aware of the fact that clinical trials processes have slowed. I'm also aware of the fact, which I was amazed, I never knew this until I came into government, that it isn't one NHS. There are about 280 NHSs, as many of you will know, who try to be involved in procurement. So we've taken a lot of action in order to ensure that we can manage that process and try and streamline it. In terms of what we're doing in the government, I meet every month with the Health Minister, Paul Quince, and George Freeman, who's a Technology Minister. Every month we meet specifically in order to talk about ways in which we can enhance the data systems of the NHS, where we can get more investment and try and solve the problems. You have the Life Sciences Council that I attended about 2 weeks ago with the biggest pharmaceutical companies, feeding directly into the Prime Minister, the Chancellor Exchequer and the Health Secretary. So in terms of what the government is doing to respond, it's significant. But we also have to make sure that the London Stock Exchange works closely in partnership with us, and as I say, we develop the ecosystem, and we have enough capital at that gap level in order to ensure companies roll through. And the last thing I'd say is ambition. I don't know if any of you have ever worked in America. Hands up if you've worked in the United States. Keep your hand up if you think that they're more ambitious when you spend time. It's really a very important point. I've had businesses in the States, I've had businesses in the UK. I had a very interesting example. I had a meeting in London a few months ago with a company, and the company saying, I hope we can, hopefully we can list for 100 million, and then I can sell out, and I'm going to make, 10 million pounds. I'm very pleased with myself. I've achieved. I flew to America, and by chance I had dinner with someone that night who had a very similar type of business. And he said, well, if we can get to a $50 billion market cap, then I'll start to feel happy with myself. And I think we need to have, to be very proud of building great businesses. We need to celebrate business success, and we need to cherish business people. And all too often we're down on ourselves as individuals. You are doing the most important things in the world. You're going to keep me and my daughter alive. There's nothing more valuable or relevant. And in terms of our global status, if you look at what we did with the vaccine program, what Moderna and BioNTech are doing in terms of coming here, this is everything to us. So we really need to raise our game and ensure that culturally we're proud of becoming truly a hyperpower when it comes to this sector. So one last question, and then I'll leave you to your morning.
Minister, it was great to see you at the Life Science Council, where it's small companies as well as large companies represented, seeing the government. The small companies are there in force.
Yes.
As we compete globally, I've just come back from Bio in the States, and I look at the changes that the Inflation Reduction Act in America are having for our sector globally. And I think there's a real opportunity for us to make the case that the UK can become the best place in the world to launch novel products as changes in America make it more difficult in terms of patenting and pricing. Will you help us sell that story? And the next time we have a Life Science Council, can we have a reception at Lancaster House hosted by you for the small companies to make sure their voice is heard as much as the large ones?
Well, I've never been invited to something that I haven't actually started yet, but I'd love to come to the Lancaster House event, and I'd be proud. I'd be proud to host this. I mean, I think that the ecosystem of small life sciences firms is essential, and I'm very glad you feel the Life Sciences Council is so important. I mean, I think that if I look ahead, we have a number of important challenges. We have some big lorries to turn in terms of the NHS, and we have to make sure that the government sits alongside you. We also have to get the regulatory framework right in terms of financial services. But the important takeaway I want you to have from this discussion is that we get all this. We're not defensive about the issues we face. You've got a series of great ministers in place who understand your sector in terms of the science and the technology. George Freeman and Will Quince are really global leading experts. And I hope in terms of basically commercialization, capitalism, and trying to make sure that your companies prosper, you have a very clear example in someone like myself. So we're committed to you. We're committed to making sure that we are absolutely seen as the number one place to come to set your business up, to develop your drugs and other health technology, and to commercialize it, and to be successes as individuals and your companies. And I really see this as a partnership. So, Tim, thank you very much indeed.
Thank you, Mr.
Link in with me. If you get my phone number from the department, I'm delighted. What I loved is when I got my business cards, there was no phone number on it. I asked, why is there no phone number? And the official said, because then people might telephone you. And I think I'm trying to change the culture there. But you have me directly as your ambassador in Whitehall. We're doing everything we can to support you. I really am grateful for the time you've given me today, and I wish you the greatest of success. So thank you very much.
Thank you very much.
That's great.
Thanks for coming.
Thanks a lot.
Ladies and gentlemen, good morning. And just to reiterate Tim's comments from earlier, welcome to the London Stock Exchange. It's great to see so many people here. For those of you that I've not met, I'm Marcus Stuttard. I'm the head of AIM and UK primary markets here at the Stock Exchange. And I always look forward to this event every year. And mainly because actually hearing your stories and hearing what the companies in this country are doing to improve the lives of people and the innovation and the technology, it's always not only reassuring but really aspirational. As the Minister outlined, there is a lot going on in the UK at the moment, and I'm very conscious that from reading some of the headlines, there is a temptation to sometimes be a little bit downbeat. But actually, I think one of the really positive things that's come out of the last 18 months or so is a real desire across all of the major bodies, whether that's government, whether it's the various departments, Treasury, Department of Business and Trade, whether it's the regulator, the FCA, whether it's London Stock Exchange, the operator. There's been a real coming together to deal with and to really shine a light on some of the challenges that in this sector, I've been talking to Steve and Andy and various of you about for many years. And so I think having really brought some of those issues to the fore, the mini budget highlighted the challenge that we've got, that we've all known about for many years, but with the pension fund sector. My CEO, Julia Hoggett, is chairing the Capital Markets Industry Task Force, which is seeking to make sure that despite all of the very positive regulatory change, that where there are still gaps, whether it is in relation to pension fund allocation, whether it's feeding into Rachel Kent's review of equity research, whether it's the development of our intermittent trading venue that you'll be hearing more about from us over the coming months to provide liquidity for private businesses, whether it's the inclusion of individuals and retail investors, or really tackling corporate governance and the role of the proxy agencies and executive compensation. Some of these really big issues, there is a very significant package of work going on to tackle those. So it makes me actually feel very positive about the future. That's not to say that everything is doom and gloom and there are problems that need fixing. I mean, just to remind people, we have already had 18 IPOs year to date across AIM and the main market. We do have despite the rude people this morning who've already mentioned NASDAQ. It's clearly that it would be the elephant in the room if it wasn't mentioned. We are very conscious for your companies, for this sector, that draw to the US capital markets, but also some of the misperceptions about the pros and the cons of Europe and London versus the US around valuations, relative valuations and liquidity. And what we really want to do is make sure that you all have the best information available to be able to make informed decisions and to be able to join up the funding continuum from seed to later stage IPO. And we do have actually good foundations in this sector already in our capital markets with over 100 healthcare and life sciences businesses listed. And one of the things that we are very committed to is to make sure that we are able to support businesses from the Aracords of this world through to the GSKs and everything in between. And I think one of the big benefits of our markets is that we have AIM as well as the main market. So we have ecosystems and pools of investors that understand small and growing companies as well as global titans. And we want to very much build on those foundations. Now, I'm very conscious that you've not come to listen just to the London Stock Exchange and to my propaganda. And the thing that's the most important thing about this conference is actually the investors hearing from the companies and from us getting insights into what's happening in this fantastic sector. So let me hand over to James Rowe, who is going to chair the first panel on access to finance. James, please. Thank you.
Good morning. We didn't plan this session. It so turns out that I think a lot of the questions that have been asked and the issues that have been raised are a very nice segue into our discussion. And possibly the most dangerous words in the English language I'm about to utter, which as we go through this, please feel free to challenge us, okay? I'm going to introduce the audience, and I think the panel, I think they're perfectly placed to address questions, but this is an opportunity to get into the nitty-gritty of some of these issues, okay? So let's have an open discussion. I will regret saying that. So if I introduce us. I'm James Rowe, I'm a partner at Overy. I'm not wearing a tie, that is dress down for me. And in terms of the collection of panellists, if I start from that end, we have Umerah, who is part of the LSE, and she is responsible for developing the offering in private markets. So offering private solutions, supporting businesses to assess capital. So one of the people, as part of the ecosystem, we'll keep referring to the ecosystem, who is hoping to keep that vibrant. Emma, who is from British Patient Capital, also providing capital, but another important part of that ecosystem on the public side, but working with the private side in order to make money available. And one of the things I hope we get to touch on is about co-investment, the government working with private capital, pulling in private capital. That dynamic, I think, is potentially it is an existing strength, but it may become even more of a strength. Tom, who is a partner at MVM, who manages a number of healthcare-focused funds. It's a recent $500 million fund, and the average check is between 25 to 100 million. So if you need that amount of money, Tom is sitting here. But invest in commercial stage healthcare companies, therapeutics, medtech, and tech-enabled pharma. And then lastly, but not least, Sav, who is the Chief Investment Officer of DeepBridge Capital. It's a 250 million EIS fund, and it specialises in technology and healthcare investments. Smaller average ticket size, but very important ticket size of around 2 million from seed to Series A. And a prior history himself in founding companies and as an investment banker, so covering the full spectrum. So we're going to, over the 45 minutes, or slightly less now, talk about, it's really 3 questions, but I suspect they'll get a little bit mixed up. One of them is about the strengths of the life sciences sector in the UK, and we cannot forget that. When we talk about some of the complications, let's not forget the strengths. I think it'd be good, I'm assuming it'd be nice for the audience to hear about what it is that drives an investment decision. So what are the things that investors look for when investing, that companies should be seeking, businesses should be seeking to aim for? And then getting on to some of the questions that were raised earlier, the issues and the challenges of raising finance in the UK. So hopefully that works for everybody. But we'll kick off, there's no particular order here. If I start with Sav, if you want to spend a couple of minutes talking about the strengths of life sciences in the UK.
You know, I'll be very big-headed if I sat here and try and find something original to say. We all, you know, work in this space, so we all recognise that our great universities, you know, a whole host of everyone in the audience and on this panel has come through them, and we've seen a lot of technology come out of universities, which will then go on to be commercialised and eventually sold to an Casdagli behemoth. And that's one of the greatest strengths. But if you actually drill down, what is it that makes our universities so great? And there's a number of characteristics. It's cultural of British society. You know, that sense of resilience, you know, fairness, the ability to critically challenge things. And I'm going to embarrass Simon now, sitting here at the front. We used to work together many years ago, and I was a younger start and he was slightly longer in the tooth, and I would be sort of, you know, there doing my work, trying to work out whether a particular molecule was going to take over the world. And I'll go up to Simon and say, Simon, could you just have a look at this? And he'll turn around and say, do you have any peer-reviewed papers? I'll be, kicking the desk. And I mean, what is he asking for peer review? I'm actually trying to get a quick answer here to make this buy case, so that we can all make millions and go and buy Ferraris and big houses in the country. But that's it. We actually build trust by submitting ourselves to be peer reviewed. Anything that comes out of British universities has got a higher sort of bar that it passes, and I think that makes life a little bit easier when whoever it was that went to bio and you're talking to some of your potential people that you can license technologies from. They will have a sense of trust, which I think is very hard to gain, and very easy to sort of lose quickly if you forget all that.
Tom?
Great. Well, I have the benefit of we invest in the US, the UK, and in continental Europe. So I think, I've got some perspective on where I think the kind of high spots are in the UK. I agree with everything you've said. I think for us, the kind of the legal framework and the culture and just the ease of doing business in the UK, certainly compared to continental Europe, it is just a much easier and better place to build businesses, in my view. I think we invest exclusively in commercial stage businesses, and I think there are some really strong sectors, and there's some sectors I think which are more challenging in the UK for commercial stage companies, and that's businesses past regulatory approval that are kind of turning over anywhere from kind of $5 to $100 million of sales. I think certainly on the digital health, I think the UK is really strong. I think on pharma services, I think anything in gene therapy, I think CDMO businesses are really strong. So lots of services to the industry. I think generics, it's interesting. We're not so much a therapeutics developer, so I can't really comment on that, but obviously there's lots of capital for therapeutics development at the early stage in the UK. I think it's a great environment to do early stage R&D. The two areas that we find more challenging, I think, are medtech in the UK, and I think specialty pharma in the UK are both challenging, and I think that's really because there are many wonderful things you can say about the NHS, but it is not a good early adopter of technology. So as a commercial stage investor, when you're looking with a medtech business to want to get to your first $10 or $15 million of sales, it's really difficult to sell that into the UK market. So for those businesses, we tend to focus more on the US or help those businesses instead of spending a lot of time and effort in the UK to move to the US.
Yeah, I think one of the concerns sometimes you hear is the difference between rhetoric and reality. If you look at, we've had Lord Johnson mention the NHS, and it's an asset, and I don't think anybody would deny there's a lot of value there, but there needs to be action around some of the stuff and development. So Emma, do you want to pick up on the strengths?
Yeah, absolutely. I think I agree with everything that's been said so far. So British Patient Capital focuses on the UK. We are government funded, and so we are investing in UK companies and UK investment fund managers. So I think it's really the combination of the the research quality in the UK from our academic institutions, but also places like the Crick Institute and the Sanger, for example, in combination with the testbed that the NHS is for us, and the talent pools that we have available. So I think it's that combination of research quality and talent pools that we have from the industry presence. You know, we have 2 of the world's top 20 biopharma here, and then we also have the EU headquarters for some of the other big pharma that are present here in the UK as well. That all helps contribute to the development of the ecosystem. And then we do have that early stage funding presence. So as I mentioned, BPC is an LP investor as well as a direct investor. And so we have LP positions in some of the university funds, for example. So UCL Technology Fund that's had some great successes in gene therapies. Cambridge Innovation Capital, Northern Gritstone more recently. So we've got kind of a breadth of coverage there, with those funds being able to provide that seed funding.
And one of the things that comes up in conversation, particularly by reference, I know it's slightly different context, to the IRA in the US, is the amount of money. And one of the things you hear in conversation, I think, in the UK is it's the intelligent use of money. It's not just the quantum. You can't compete with a market like the US in sheer quantum, but what you do with that money and how you invest it, therefore becomes much more important. And you can say doubly so since Brexit and the need to do it by ourselves and go on our own. So, Umerah, obviously you come into contact with a lot of companies looking to raise capital, the ecosystem, the vibrancy. From the perspective of all of those conversations, what do you think are the strengths? And if we start tipping into the second discussion point around the factors that are influencing or that you perceive to influence investors' decision to invest?
So, first of all, good morning, everyone. I think the Minister actually covered quite a lot of the strengths. We have good, and the rest of the other panellists have covered as well. We have great sector kind of representation and broad sector representation, healthcare, life sciences in the country. We've got proximity to universities. We've got proximity to big pharma. We've got actually a lot of government support through the likes of Innovate UK. We've got amazing clusters up and down the country, and I've been to, I think, quite a few of them, Harwell, Daresbury, and in Cambridge. And that's so important because I think with the capital that's available, and we'll get onto the challenges, but with the capital that's available, companies also need that support. So it's not just a funding continuum that is needed, but actually a continuum of support to get to go beyond that research stage into commercialization and really scaling your businesses. So yeah, I would say all those things together, they're great strengths, but actually the challenge is how do we deepen those strengths and how can we really actually scale?
And we'll come back to that support because obviously LSE is trying to provide an ecosystem where that support is there, but it's also packaged and readily available. But switching therefore into kind of what are the key factors that drive an investment decision? Tom, if I start with you on that from your perspective.
Yeah, I mean, I think like all investors, you're limited and governed by the size of the fund you've got and therefore the kind of businesses that you're looking to build. I mean, I think, asking investors what they want is motherhood and apple pie, right? It's a brilliant management, great business plan, it's a compelling product, it's best-in-class technology. I think everyone knows that. I think it's really understanding, what are the constraints that you've got? And if I think about us, I mean, our chief constraint is the size of the check that we want to write and therefore the scale of the business that we want to build. So if we're going to write a $50 or $100 million check, we've got to feel that we can build a $300 to $500 million business. And what that does is, there's a number of implications that come out of that. I think chiefly it's a market size question. You can have a fantastic product for a small market. We're just not the right investor for you. You need to get an investor and come up with a plan where you can drive a compelling business with 15 or 20 million rather than 50 to 100 million. So I think that's the first thing. I think just making sure that the end market, the end addressable market rather than the market you put on PowerPoint is really going to be able to drive a business of scale. I think the second thing, particularly in the UK, which is, and maybe nobody wants to hear this, which is there a liquid pool of potential acquirers for the business? Because, if I look at our exits, and this is independent of whether or not they're in the UK or the US, probably 75% of them are trade sales. And that's because the ultimate acquirers of those businesses have such strong operating synergies, can extract much more value than they can as independent businesses. So we're really looking for companies that are going to be attractive, not just to one acquirer, but that there might be a number of acquirers. Sometimes that's going to be the trade, sometimes it might be private equity, but if we went into an investment and we thought that the only path to an exit was an IPO, we would be concerned, because we all know there's periods of 2, 3, 4, 5 years sometimes where the IPO markets are not receptive to highly innovative businesses. And then I think the third thing is people talk a little bit about ambition, and I agree. I think that the difference in ambition between European entrepreneurs and US entrepreneurs isn't really that different. I think it is about means. Most people who've spent 7 or 8 years building a business, if you say, here's a lot of money to really build it to be a good business, will say yes. I think for me, what we're looking for, though, is founders and entrepreneurs that understand as you move the business in that direction, you need to bring in a broader pool of talent into the business and are willing to bring in best-in-class talent, not their friends or people they know, but really expand the talent pool. And often for many of our businesses, that means some of the activities are going to need to be relocated to where the compelling market is, which is normally in the US.
And we'll come back to some really nice further topics of conversation. The market size, what is the market like in the UK? Quite clearly, when we talk about the IPO or the listing venue, what makes it function is the quality of the companies that come and the addressable markets. And talking about the environment in the UK, the business environment, that's fundamentally important. Sav, from your perspective, what do you look for good companies to invest in?
Well, I'm a much earlier stage investor, and so what I look for is people to invest in, and people that actually will be really good friends and able to present well to this guy so they can get his check, so I can exit. But joking aside, that doesn't happen very often. That a Series B or whatever you want to define it is going to allow the Series A investor to exit. But what I'm pointing to is, one of the things that Tom's already mentioned here is that that human capital. When you're investing, especially at early stage, you are investing in full knowledge that you're buying a bag of spanners and you are going to be basically have to deal with a lot of problems. So do I have someone there that is a problem solver? Do they have the ability to go and find other problem solvers, so you can actually start turning ideas and concepts and into businesses?
Let me ask you a question. One of the things it's nice being a moderator because you get to raise problems. But one of the things we hear often is that in the UK the mentality is risk averse, whereas the US they're more willing to take risk to assume uncertainty. Now, it doesn't sound, from listening to what you've said, that doesn't sound to be the case. So do you agree or with the argument that the UK is more risk adverse than the US, or do you think there are investors in the UK who are willing to take that risk and understand it?
Look, I say, I will give the answer. I'm not going to do a political feel here, but I have to say that less than 15% of my life sciences fund is invested in drug discovery, right? So, we do take a balanced approach, and, if you think that's risk averse, that's for other people to sort of judge. What we suffer from in the UK is not necessarily the investors are risk averse, is that there's just a lot less of them, and the size of investment that goes into drug discovery, drug development companies, necessitates there to be 30, 40 pension funds or whatever it is, the fund that you might sort of aim at to get investment from. And do they have the specialism within, so that there can be somewhere inside those funds that can be the sponsor, that can actually really go and push for that investment to take place? And I think we're often focused at the top of the pyramid. Is there an IPO? But actually, the IPO or whatever, the base of the pyramid needs to be much broader, much stronger. There needs to be a lot more people who have PhDs or are able to and are still able to analyze a new drug coming through and still be able to actually have the communication skills to convince their colleagues to make that investment and understand the time that it might take to actually get to an exit. Yeah, it's easier to be more less risk averse if you've got the volume of capital that you have in the US. It's a much more competitive market, so that pushes people towards taking more risk. That's just natural. I don't think we can sit here and create, or any government can sit here and actually create an environment in which people will take infinitely more risk than we're taking or we have been taking over the last 10 years. But if you start focusing on actually, the bottom of that pyramid and try and create solutions, then the top of it will take care of itself.
So picking up on the idea of intelligent use of capital and actually the important role played by British patient capital, Emma, would you like to come in and talk about what you look for, but also you think that it'd be good to understand the role that your organisation plays and the benefit that you think it brings to the ecosystem?
Yeah, happy to. I think if I just pick up first of all on kind of the difference in risk tolerance or kind of acceptance kind of between the US and the UK, I think venture, and particularly I suppose life sciences kind of venture investing is about kind of taking informed risks, but the risk you're prepared to tolerate is different in those two different ecosystems. We've touched on here having kind of financing risk about where future funding, whether you're the investor or the company, are going to be able to obtain it. I think that is something that, is less of a risk in the US ecosystem. They're less concerned about where the next check is going to come from. And I also think that because of their fund structures and the scale of capital in that ecosystem, that they can afford to kind of they have to kind of seek larger exits when you're running a larger fund. You have to be able to kind of drive a meaningful exit for that fund when you expect that the fund's returns are going to be driven by a small portion of those of the companies in that portfolio. So I think kind of with those things in mind, BPC is British Patient Capital. We're a commercial subsidiary of the British Business Bank, dedicated to UK venture. So we are trying to develop the ecosystem. We have invested in 40 different fund managers across sectors to date, invested over £1.5 billion through those fund programs, and we've more recently been investing at Series A to Series C in research-intensive companies in the UK. So that's life sciences and deep tech. I sit in the life sciences team. We've invested in 9 companies so far, and I can spot Ian in the audience, CEO of Quell Therapeutics, one of those, and have a range of other exciting businesses there. But we're really trying to build a portfolio of companies we think can showcase UK science and that are building, I suppose, enduring companies that are building kind of product businesses with a broad pipeline of products. So these are not single asset companies that are kind of necessarily positioning themselves to an early exit. As Tom kind of mentioned, if your only exit plan is an IPO, then that can be a challenge. But we want companies that are going to be building towards that path to be able to kind of have a long-term presence in the ecosystem, continue to contribute to the expansion of the talent pool, and I suppose give back kind of in that way. But we're also kind of working to increase the presence of kind of fund managers and the scale of capital that those fund managers are deploying back into the ecosystem. So we're really trying to do this in concert, both as a direct investor and an LP investor, through Future Fund Breakthrough and also the Life Sciences Investment Programme, which is trying to create larger life science investment funds specifically. So we've made one investment through that programme so far. That was into an SV Health Fund, the Biotech Crossover Opportunities Fund that they announced. I think that was in the beginning of this year, and they've invested in, I think that's 6 companies so far, 4 in the UK, 2 in the US. So we're trying to kind of build that whole ecosystem around these innovative companies.
I mean, coming in and doing co-investments, and I mean, what obviously you speak there to a lot of the private capital that's potentially available. What's your view on the extent of that private capital and how easy it is to access it. And I know there's a role also played by British venture capital in terms of doing some of the diligence, providing some confidence to investors to invest, and essentially being a partner with them. But is that from your perspective? Is there a decent amount of capital? Is it a healthy ecosystem? Is it functioning?
I think there is a functioning ecosystem. I think we could continue to improve upon it, and we really ought to be. There is a functioning ecosystem at present. As a direct investor, we kind of co-invest on commercial terms with investment syndicates. So we are not leading these investment rounds. We are working with the market and having another investor kind of put down a term sheet, but we can then potentially match the check size and the terms of the investments that they are making to kind of join those syndicates. We've seen very few UK investors lead those funding rounds. So of our 9 investments that we've made into this portfolio, there have been two of those companies raised funding that were co-led by UK investors. So one was Quell with SV in there, and then we also had Proximy that was co-led by Advent Life Sciences, so that was a health tech company. But we are very much trying to work with those funds to be able to ensure that the companies themselves are fully funded and not having to compromise on their ambitions.
In terms of the role the LSE is playing, the different platforms that have been created and are being created in that ecosystem, do you want to comment on how the LSE feels it's contributing to that ecosystem, but also is there anything like it in the rest of the world?
Obviously, there's nothing like it in the rest of the world. That's an easy one. But we recognise as the stock exchange across all developed markets, not just the UK, the IPO is coming at a much later stage in a business's life cycle, which is, it's a fact, and it's a trend that has been seen over the last 20 years. We're also seeing that fewer companies are choosing to IPO, and that's because there are just greater allocations happening in the private space from institutional and non-institutional investors. So I don't know if anyone is familiar with the McKinsey Private Markets Annual Review. There's now over 7 trillion under management in private equity. And 50% of that is in venture and growth, which is also an increasing trend because institutions are looking for that growth. From a UK perspective, and what we're doing is really how do we build that scale? How do we enable, to Sav's point, how do you build that base of the pyramid? It's about more research. It is about more at the university stage, but then how do you help those businesses and ideas spin out of universities? How do you bring the right kind of capital at each of those stages? How do we have more people like Sav? And then how do we help him and those early stage investors recycle their capital? So from a kind of big reform perspective, the Minister mentioned this as well, there's a lot of work going on around radical pension reform. So UK pension funds actually allocate a very, very small amount, I think it's around 6% to UK equities. And that is a trend that has, they used to invest over 70% to equities 30 years ago. And so how do we create the right kind of reform? Some of it is regulatory, some of it is risk appetite, to allow greater institutional allocation in this country to, higher risk, to be debated, but higher risk or earlier stage businesses. And then create the structures that allow for pension funds to actually invest because they're not going to be investing directly. But then earlier I also mentioned how do you build kind of a continuum of not just funding but also continuum of support. I think one of the things that we announced earlier this year was our partnership with Innovate UK, Invest in Innovation, and actually after this main event we're running a fringe event with them. So with quite a lot of their companies, because I think there is Innovate UK support thousands of businesses across sectors. And high growth sectors, sectors of tomorrow. How can we help those businesses to better access private capital? As some of it is preparation and how you tell your equity story, etc. But then it's also actually about informing the investment community
particularly the later stage and IPO market investment community, on exactly what are those sectors of tomorrow, and what are within this healthcare life sciences sector that we're talking about today, what are the subsectors, what are the technologies that will need funding and at what kind of scale. So that's one thing. In terms of then actually helping companies access capital and liquidity, and allowing for them to evolve their cap tables as they're growing, we're doing two things. One is we are partnered with a fintech called Flow, and I think there are a couple of Flow colleagues in the audience today, where they're supporting companies in actually better sharing their information with control. So, private businesses are reluctant to share information, but share information with control, with the promise of actually getting better access to investors. So a company can raise through Flow with their bank or directly. And then the other thing we're doing, which my colleagues have mentioned already, is we are launching a new market which will launch next year, which will focus on actually helping businesses access liquidity. So it's really for maybe those businesses that have diverse shareholder bases or larger, and want to give their employees and earlier stage investors access to that liquidity on a periodic basis. So more on that to come in the coming months.
In terms of where we are, we started about 15 minutes late, so we have an additional 15 minutes, and we're going into those 15 minutes now, I understand. So we're going to come on to some of the challenges in a second, but just a couple of observations before we get there. We keep talking about an IPO, and that's great for me because I do IPOs. But actually, that's not the end goal. So that's an option for a company. This is about providing a company with capital. I think the important point here that's coming out of the conversations, and we're hearing about it, is this country is thinking very seriously about what money is available, what capital is available, how you make it accessible on the right terms for everybody. This is not about forcing people to deploy capital. This is about creating the right conditions and the way that you funnel it. So if we look at lifts, or we look at those are the vehicles that are being created, the tax treatment around that's being considered, the questions are being asked about how capital is being sensibly deployed. And this is an effect of aggregation. The benefits hopefully reinforce and the ecosystem here. And a nice mention to Innovate UK. I mean, there's a number of organisations, CFIT obviously in the technology space, that are being created in the UK to bring together government and industry. So we've touched on ticket size, and we've also talked about scale-up capital. And one of the comments that you hear is, look, it's great for startups, development, early stage. It's great if you get to the end of the rainbow, but there's this stage in the middle, scale-up capital, where the money is just not there, it's just not available at the size. So the question we're going to go for the panelists is to grapple with that one. Do we think there's a certain point in our ecosystem where companies simply can't get the capital that they need in order to scale up? So Sav, I'm going to start with you.
It is the downside of sitting next to the moderator. You get the question first. Look, it should be hard to get scale-up capital. It should be by design. I'm not pointing to survival of the fittest, but if it was easy, then a lot of wastage will probably take place. That said, as an early stage investor, that sort of 25 to 100 million pound check is the thing which is probably stopping growth for the better decile of my portfolio, and they spend a huge amount of energy trying to position themselves to be able to get those sort of levels of checks, and knowing that if that doesn't happen, everything that they've built over the last 3 to 5 years can just crumble like this. So absolutely, it is the hardest thing, and it's by design. But to actually sort of bring it back to what I said earlier, by broadening that base of the pyramid, then you get a lot more shots at goal to get a check of 25 million. Because if you only have 4 or 5, then it's much easier to miss for whatever reason. It might be the end of a fund. It might be not quite hitting the sweet spot. It might not be the good chemistry. The terms might not be right. Whatever it might be. But if you have 100 of those funds, then you have a much better probability of being able to be successful. And that's important. I think that's the what we need to be really obsessed about, because the data is very clear. When you go from having one institutional investor, and in seed stage companies you tend to only have one. Series A, if you're lucky, you might get 2 or 3. But if you have those 3 institutional investors, the probability of success goes up by over 50%. So having those kind of rounds where you can have 2 or 3 people write a check for 10 million, that really helps.
Tom, obviously you do write checks that amount. I know it's commercial stage companies, but it'd be interesting to hear your perspective on it, but also on those companies that aren't in the commercial stage.
Yeah, so it's a really difficult question to answer, because I've got very different experiences, which is often when I find a company that I'm really excited about and that I think has got a great team and a great product and all the things that we want to see, you talk to them, there's 3 term sheets and the prices are really high, and it is genuinely competitive. And while in the space that we're in, there aren't that many investors in the UK that invest in commercial stage healthcare, investing 50 to 100 million. There are quite a lot of people globally that will do it, and it is, if you have the right business and the right product, it's relatively easy to attract capital from other markets into it. So, part of it is when I see a really good company, it's almost always there's a number of term sheets and it's competitive and the company can raise money. At the other side, you have the experience of people in this room and many entrepreneurs who really struggle. And so I find it hard to reconcile between those two positions. I think from my experience, what we're looking for in a company is a business that doesn't necessarily have a certain level of revenue per se, but has really proven that they can, albeit at a relatively small scale, maybe they're in 10 or 20 hospitals and they're doing a few $1 million of sales, but that they can make the fundamental economics of that product work for everyone. So the doctor's better off using it, the patient's better off, the hospital's better off, you're getting reimbursed, and that all works. And I think but that is a challenge to do, and it needs a fair amount of capital to do it. And I think that's where we sometimes see a gap, which is, investors fund businesses, they think, I'm going to be able to sell this on regulatory approval or at and around that point. They haven't really built the infrastructure in the business. Then they haven't got the proof points that we need to see that say, okay, well, you've done this with 5 sales reps, we're going to give you 35 sales reps, and we're really going to scale the business. And so for me, that's the bit where there is a challenge, and it's also the skill set of the investors, because I think, we're not particularly good at doing early stage technology development. At the same time, I think there's quite a lot of people that are really good at investing in early stage technology businesses that aren't quite as good at commercial. And I think what we see is there's that bit between kind of late development, early proof of business model, where there can be a challenge in a shortage of capital. But once you've done that, I don't see there's a shortage of capital. If you only want to look at investors that are geographically 100 miles away from you, it is going to be difficult. But you've got to get on a plane and you've got to go and see people, because often, my view is that you really just want to find the best investor. It doesn't really matter whether or not they're based in the UK or whether or not they're based in some other territory. So I think there are parts of the market where there is a gap. I think for the pre-revenue businesses, Sav will probably have a better view on that. It does feel like there is more of a gap, I think.
It's hard because scaling a business is hard.
Yeah.
So thank you to all the entrepreneurs who do it. This community can help each other in how equity stories are told, and the preparation and the visibility to the right kind of investment community. But you also need support with the fundamentals, and some things will be more successful than others.
I mean, Emma, you fly the British flag here, and I know there needs to be a connection with the UK to invest. I mean, from your perspective, and I'm absolutely right. I mean, capital, you need it wherever it's based, but in terms of the availability of UK capital around that ticket size, is there a gap from your perspective, or even if there's a gap, is there a gap that's being filled?
I think there is a shortage of UK funds that can lead those investment rounds at kind of scale-up stages. I think what you define as a scale-up stage depends on the sector that you are operating in, kind of within the life sciences, different in biotech to a device, diagnostic, enabling technology play. I think there is a gap for those funds that can lead those. And whilst I agree with Tom that companies should be sourcing their financing from wherever they can get it, and the UK is very attractive to international investors, and we want it to stay that way. If we don't have the UK investors that are benefiting from that investment return, then it doesn't necessarily come back into the ecosystem here. And that's what we would like to kind of see happen. I think we have as Future Fund Breakthrough, we're specifically focused on companies that are raising funding rounds of £30 million or more, because a government research report in 2021 found that actually that was the threshold, that UK companies found it that much harder to raise private financing. There just isn't the depth of the capital available once you start to get to those funding rounds. So that's where we're focusing our efforts and attention. And we've participated in funding rounds that have been anything from that £30 million minimum to over 100 million so far. And then when we've kind of done analysis of what really is the market activity at that range, there were, only 30% of the investors that participate in the funding rounds of over £30 million in UK life sciences in 2022 were from the UK. So it is vast majority international investors that are active here. And we have far fewer of those funding rounds that are happening in comparison to other ecosystems that shall not be named.
And that answers sort of surprise. I mean, if there weren't a potential funding gap, we wouldn't be trying to fix something. I'm conscious we've got 7-8 minutes. We've got a couple of questions that have come through.
Got to make it 3 minutes, actually.
3 minutes. So I've got 2 questions. I now can't ask Sav the question. It's okay. If actually, it probably is better to you actually. How can UK universities improve commercialisation of their research? Actually, that's to everybody. Apart from just equity, is there a way that universities can better commercialise their research? Actually, do you want to, Emma, you're looking...
I guess there's we kind of touched on kind of the UK kind of level of ambitions, but I think it's kind of showing that it's possible and kind of increasing the exposure of academics to their tech transfer teams and commercialisation officers. I think reducing the risk of failure or stigma of failure in those scenarios would help.
I'm gonna having just praised UK universities, I'm now going to slam them right down. They need to educate themselves first of all, right? You don't basically you don't derive the value of a patent by dividing what you've spent over the last 10 years by the number of patents you've generated over the last 10 years and then think, oh, I need that. You don't go and take 40% of a startup company because that creates equity suffocation. You've got to look at examples that work. In the US, pretty standard, take 10%. They invest in really good tech transfer officers. We've got a lot of work to do, and I think there's a lot of universities that are doing it right now. But I wish they started 20 years ago. And I think a lot of that, how can we commercialize IP? If you've got good tech transfer officers that can be out there at bio talking about that IP as much as the entrepreneurs are. So again, it comes down to human capital. Do we have the people with the experience, or we were talking beforehand, going to bio or any other conference like that and actually speak the language of those people that can license technologies? Because you can't just parachute someone that has never done it before into a bio and expect they're going to get a good result.
And there's actually a government review going on the university spin-out model in the UK and learning from international standards and whether there's kind of some knowledge sharing that could be encouraged. And we've had great, be short, sorry Tim. We have great examples on our market, vehicles that have come to support in a more commercial way technologies out of universities. So IP Group being the kind of prime example.
Never want to cut across a lawyer. We're going to have to stop it there. We are running a little bit late and we're going to try and make the time up by shortening a coffee break. But I hope 2 things. One is that you found that as interesting as I have. And thank you, panellists. And the second is I hope also, panellists, that you'll be around if anyone wants to ask the individual questions or they're too bashful to ask in public. But thanks very much. And can I can I please invite Ash Patel, who I know is here, and Deidre. Where's Deidre? You're there. Excellent. Come on up, please.
Quick intro and I'll hand over to
Oh,
you.
it's you. I didn't even look at your name.
It's quite all right.
Thank you for them. I'll just go with this.
I'm just going to do an intro.
Yeah, fine. Actually, I meant to bring my colleague along, but I realised she didn't have a badge.
Hello? Hello? I need to learn a better range of hand signals from the Minister, I think. If we can please start again. If anyone would like to sit down, please do, and we'll get going. Ash, going to start?
Super. Well, thank you very much this morning. My name is Ash Patel. I head up Numis's private capital markets team, which we call Growth Capital Solutions. We work with growth stage companies, helping them to arrange private financings right across Europe with a range of global international investors. It's a great pleasure to be here today and to be introducing some fascinating companies, starting with Deidre from Hertility. So I'm going to hand over to you. Thank you.
I'm just going to check that I can work this clicker. Yes, I can. My name is Deidre O'Neill. I'm a dual qualified corporate lawyer. I specialised in venture capital and M&A. And working in the city is tough. You are expected to be the boss, the breadwinner, and the baby maker. We plan our spending based on our bank reserve, but we do not plan our families based on our ovarian reserve. Alongside me is my identical twin sister, Dr. Helen O'Neill. She's a world-leading expert in prenatal genetics and fetal medicine, and a tenured lecturer at UCL, where she lectures masters and medical students in everything to do with women's healthcare and reproductive health. Alongside her was Dr. Natalie Gatroy, an ovarian biologist who dedicated her career to improving outcomes in preserving fertility for cancer patients. The three of us had something in common, aside from our obvious DNA. My womb mate and I were both in our 30s, alongside Natalie. We all had access to private healthcare. We all had access to the current healthcare system. And more specifically, they had access to world-leading experts in embryology, infertility, and in reproductive healthcare. But none of us had access to basic information about our own reproductive health. The question started, can I test my fertility? Can I see where I'm at? The current healthcare system is broken, so we've decided to build our own. We've started with a patient-centric, AI-driven, and data-first, end-to-end solution for women's health. It begins with an online health assessment, where you are triaged for over 54,000 variables of clinical scenarios to assess your own personal reproductive health. You then get sent an at-home blood test, where you do it at home, without leaving, and you send it to our accredited labs, and they will send it to our personalised team of private gynecologists, where they will assess your personal plan, your lifestyle, your biometrics, factors relating to you personally, not generic results, and the doors of your virtual clinic open. There you receive all of the information about your reproductive health, your hormones, and any guidelines or next steps in terms of optimizing your health. Should you wish to speak to an expert, you have the option to speak to our team. We've dedicated our team and chosen specialists in every aspect of gynecology, reproductive health, fertility, menopause, and every aspect in subspeciality within those, experts in PCOS and endometriosis, to ensure that irrespective of your life stage or any condition you may find, you are receiving world-leading expert care. From there, if you need onward care, we have access to over 85 scanning facilities and clinics across the UK and Ireland. It's very important to us that we created something that was end-to-end. In my mind, it's negligent to provide someone with information, i.e. blood tests, without a proper and adequate explanation of what they mean for you. It means nothing to see something on a line and know that it is either in range, out of range, and that you can't do anything about it. So what was very important to us was that we created something that was very personalised to every individual and that was easy to understand. Our report speaks to the user as if it's your own best friend who happens to be an expert in gynecology. We then made sure that we had a full community of care to start what we're calling the reproductive revolution. And we provide training, policy and education. Before we did anything, it was important to us that we became the most regulated product on the market. There is no other provider in blood testing that is upheld to the standard that which we have obtained. We have the ability that differentiates us from any other provider to not just diagnose, but to treat and to prescribe. This means that we're closing a diagnostic loop, that we're able to provide that onward care and end-to-end pathway. And we've seen explosive growth. We've seen a 520% year-on-year growth, and the demand for this is so key. And why is it so explosive? Because 1.6 billion people are living with a gynecological condition globally. 1 in 3 women has a gynecological condition. That's staggering. And yet it is under-researched, under-resourced, and underserved. If you look at the fact that 100% of people, women and men, menopause exists too, will enter into some form of hormonal challenge in their life, we're dealing with a lot of hormonal people. But society has deemed us hormonal and uses our hormones against us. And in reality, we should be optimizing what our hormonal health looks like. If you think about what money is spent on fitness watches, tracking our steps, tracking our calories, when the one thing we should be tracking is our ovaries. We track every redundant metric relating to our life and we cannot do anything about it. And yet, our hormones dictate our skin, our mood, our weight, our metabolism, our sex drive, our sleep. And so getting to one with your hormones seems to me to be the very first step any individual should take in terms of their healthcare. And not forgetting the staggering statistic that 1 in 6 people in this room will be infertile. So we've recreated the clinical experience, something that is streamlined, something that is cost effective, something that doesn't require massive wait lists. What was the clinic that was closed down during COVID as deemed to be non-essential? Women's health. And so as a result, there's over 500,000 women just waiting for gynecological appointments in the UK. Not to mind the global impact, not to mind the people who have just questions about their reproductive health. When you consider that we started Hertility with the question, can I predict my fertility? Can I assess my own rate of fertility decline? And then the question became broader and deeper. Actually, it's not just about fertility, it's about all of the underlying things that affect your fertility, but not just your fertility, your reproductive health. Nowadays, reproductive health tends to be siloed into periods, undermined, menstrual health, fertility, and menopause. When you look to workplaces, everyone is shouting about what do we do about menopause. But in actual fact, it's the seismic change of our hormones throughout our life that should be dealt with. It's assessing what is your rate of menopause, what is your rate of ovarian reserve decline, what is the rate at which you will enter into menopause. We've started with something that deems to test one aspect, and we've grown. We have a full research team of 12 people, we've got a dedicated team of 12 expert doctors, and we've gone into every aspect. We've looked to assess 18 reproductive conditions, including onset of menopause, so that we're getting a full 360-degree view of our reproductive health at any time. And our reproductive health is in change all of the time. So it's important to know that we should be assessing it not just once, but annually, biannually, however many times you think that you need to assess to essentially determine what is your own rate of fertility decline. So we've done this through testing, clinical services, and onward treatment. Our revenue streams are business to business, direct to consumer, business to consumer, and software as a medical device. It's essential for us to know that we can access all women. We call it the mother of all movements, because all women should be able to access affordable reproductive health care. Not just those who are waiting to go to a fertility clinic, not just those who are actively trying to conceive, but every single woman. So we're democratizing the fertility market by providing access to basic and detailed information about reproductive health for all women as a direct-to-consumer model. Business to business, we provide education, awareness, health screening, and policy review for all businesses. They become what's called reproductively responsible. And we're seeking to achieve that all businesses and all corporates are reproductively responsible, because it's about time that women are looked after in the workplace. And it's not just women that are affected, it's people who work with them, it's their spouses, their partners, their children, their family. Everyone is impacted by reproductive health. The knock-on effect is huge. We've partnered with Bloomberg, with Channel 4, with The Telegraph, and I hope one of your organisations will be the next reproductively responsible organisation. Software as a medical device is incredibly important. We aim to be the gynecological calculator for every single gynecologist and expert in reproductive health, so that we are doing the work for them. We have coded over 54,000 clinical scenarios, and there are over 1 septillion clinical outcomes that are guided by our report.
This is a woman. She has a body. Her body has been revered for millennia, but never studied properly. Ever. Not like men's bodies, not by medicine, not by science. Her body is too mysterious, too complex, too hormonal. In pain? Pain is normal. Oh, it really hurts. Take a pill. Irregular periods? Go on the pill. Your periods have stopped? Try a different pill. Want a baby? You're too young to worry about fertility. Have fun. Any babies yet? Don't wait too long. Still trying? Silly girl, you left it too late. Were you having too much fun? Just relax. Have you tried not thinking about it? Frustrated? Don't cry. Why are you so angry? Time of the month? Ooh, someone's hormonal. Yes, I am hormonal. We're all hormonal. Our hormones keep us alive. They make us feel alive. They allow us to create life. Our hormones, they impact our stress, our skin, our weight, our emotions, our whole bodies. Yet we know so little about them. Now is our time. Time to demystify our bodies. Time to know exactly what's happening under our skin. Time to get answers backed by science, not just hope. Fertility. Science. Meet life.
Super. Well, thank you for a fascinating presentation. We've got time for just one question, if that's okay, from the audience.
Hi. I'm curious because 70% of unexplained infertility issues are actually caused by men. And I know this or not. So how are you addressing that scenario? Because it's sperm quality that's actually a really, really big problem.
Agree, but there's a very binary issue here. We provide full end-to-end care, so that means andrology testing. We've partnered with a sperm testing clinic so that we always assess what the person's needs are. So we don't just start with one person in isolation. We ask them what they're there for. We go into a full depth questionnaire about how long have they been actively trying to conceive, whether or not what their menstrual history is, their biometrics, their factors relating to their own lifestyle, so that the first port of call to assess for a female will be to go for a scan so that we can assess whether or not there are structural issues. And for a male is to provide sperm testing. So there's an at-home sperm testing company that we've partnered with that provides sperm testing. Everyone's individual journey is taken into account. So it's not generic, it's not this is all the woman's problem. This is how do we deal with the issue that you are trying to solve. If you're just curious, fine. But if you have a systemic issue within your reproductive health, then we look to see what that is and we uncover it for both partners.
Super. Deidre, thank you so much for sharing an incredible commercial story in a very important market, and look forward to taking some more questions in the intervals. Thank you.
Thanks, Ash. May I invite up our next panel, please? And just so we can keep things moving, if we could draw to a close at 11. And I'm afraid I'm going to shorten the coffee break to just a quarter of an hour, but hopefully you can catch up over lunch.
Excellent. Look, thank you very much and welcome panelists. This is a panelist panel on enabling early diagnosis and access to treatment. I'm James Mitford from JP Morgan, where I co-head the sort of European healthcare team. So let me introduce the panel. At the far end, we've got Justin Ash, who is CEO of SPA, sort of one of the leading independent hospital groups with self-pay, so PMI, NHS. We've got Andrew Newland, CEO of Angle, one of the world's leading liquid biopsy companies, again listed on the LSE. We've got Craig Gulliford, who is CEO of Creo, focused on the use of advanced energy in surgical endoscopy. And then we've got Dr. Emma Stanton, who leads the diagnostics team at Oxford Nanopore, bringing sequencing to clinical applications. So, look, just to sort of start off, maybe Justin, I start with you, just to set the scene around what you think sort of the key objectives are from a diagnostics perspective.
Thank you. So, I think everyone knows there's 7.4 million people on the waiting list. Of those, 6.4 million people are waiting for diagnosis, either to see if they should be on the waiting list for treatment, or they're in their treatment pathway and they can't get further diagnosis. And that's actually before the crisis of getting to the GP, because these are people who managed to get to the GP. So diagnosis is the topic of the decade, really, for UK healthcare and probably global healthcare. If you look at our own business, which is 39 private hospitals, NHS and private treatment, outpatient diagnosis more than doubled since the pandemic, continues to grow at double digit. And there are two parts to the solution. One is for another conference, which is about people. So, for instance, we've built the largest private GP network because people can't get to their GP. But the other is technology. So we're investing 90 million a year in technology. At least half of that is diagnostic and other advancing technology to deal with treatment. And if I look at that over 5 years, that mix has shifted enormously. So technology as part of the diagnosis pathway is clearly advancing. And I can see, even on an annual basis, how technology is changing and will clearly help clear that backlog. So I think it's a very pressing and topical issue.
Craig, I mean, from your perspective, looking at interventional medicine and as a provider of technology, again, what does the importance of diagnostics mean for you?
So our business focuses on miniaturized technology that treats indications that might be diagnosed much earlier in the disease progression. So integrating our technology with improvements in diagnostics, so whether it's in lung cancer or colorectal cancer, those kind of treatments, we all know that earlier diagnostics opens up the opportunity to improve the patient's outcomes. We see reducing mortality rates in those diseases where we do have earlier screening as well as diagnostics, and we see those improving all of the time. So instead of endoscopy being used as the core diagnostic for colorectal cancer, for example, we're now seeing patients come to us, our technology, who've been diagnosed through a screening pathway with a QFIT test at home. They arrive, go straight into a therapeutic environment. A patient 2 weeks ago who had a QFIT positive result, non-symptomatic, 42-year-old lady with 3 young kids. She ends up in endoscopy without realising anything was wrong, and they removed a 12-centimetre lesion from her colon, which would have meant a catastrophic outcome had she left that. And that's bypassing what would otherwise have been quite a complex series of diagnostic interventions through the pathway, not just from a screening perspective. So that we come in at that stage where we're trying to provide more precise, less toxic outputs to the patient once they've been diagnosed, either through screening or more elaborate diagnostics, and also integrating with other technology partners where screening and diagnostics is not so great, which is, for example, lung cancer, which is starting to improve dramatically, targeting those kind of treatments so the outcomes are less toxic is really where our technology comes in.
And Emma, where do you see genomics fitting into this and sequencing, particularly from a healthcare perspective?
So today in healthcare globally, sequencing is to a large part confined to perhaps genetic disorders, to rare diseases, to some cancers. But at Oxford Nanopore Technologies, we're seeking to explore, largely at the moment in a research capacity, not just where the nanopore sequencing technology can be used where sequencing is today, but actually across healthcare more broadly. And that's because of the sort of low-cost, fast turnaround time of nanopore sequencing, which can be applied not just in cancer, which obviously will be a huge market, but also across infection for to allow rapid pathogen surveillance of whatever people are presenting with, and also in a much broader bucket of genetic disorders. Thalassemia is the most common global blood disorder, for example, and sequencing can be used to radically reduce both the complexity, cost and turnaround time of a lot of diagnostic tests that are currently available. And we see this as an opportunity for patient benefit, for health system benefits, for clinician benefits. But initially, there are going to be a number of barriers to overcome. Some of the benefits, I think, may be harder to quantify. For example, they may or may not always impact the outcome of the patient when you start to introduce sequencing into care pathways, but you may just improve the patient experience. For example, with people when they are suspected or have been diagnosed with cancer today and they may be waiting for sequencing results to understand, for example, what genetics may be underlying that. They often have to wait weeks, sometimes months, to get that result. That may be too late for some people. Now, if you got the result in the same day from a sequencing test, that may not change the outcome, but it's going to significantly reduce all of the anxiety that comes with having to wait for weeks and months to hear back. So I think we see genomic sequencing being radically disruptive across fields of healthcare, which represents a huge opportunity.
Thank you. And Andrew, I mean, I think maybe we should sort of touch on the diagnostics pathway. And I suppose the first part of that is this debate about early detection and whether early detection is the sort of key to diagnostics. And I suppose that also goes into your views on systematic and population screening more broadly as well. How do you think about that?
I consider the question to be highly complex, and I think that the world is taking a very simplistic view on diagnosis. So the view taken is that earlier the diagnosis, the better the outcome for the patient. I think that's completely unproven, and I can give some information behind that. So men are susceptible to prostate cancer. If you do an assessment of autopsies of men who died for any reason other than cancer, i.e. they'd never had cancer diagnosed, in their 70s, 50% or more will have undiagnosed prostate cancer, and yet they had no symptoms and it never impacted their life. So an early diagnosis of that prostate cancer might well not have helped them, might have led them to have had unnecessary treatment and potentially life-changing impacts on their situation. So I don't actually think early diagnosis on its own is the correct question. I think the question is early diagnosis of clinically significant disease that will impact the patient. So absolutely, there are men who die of prostate cancer, and the sooner their cancer is identified as being clinically significant and treated, the better outcome. But it is a complicated question. It's not just about early diagnosis. The other point is that I would say is that cancer in particular, which is my field, changes over time. So the way that cancer is diagnosed is usually by a tissue biopsy, which means cutting some of the cancer out, analysing cancer cells and determining the presence of those cancer cells, and then investigating them to work out which treatments might be appropriate for that patient. And that's because each patient's cancer is different. So 3 men with prostate cancer, they have cancer in the same part of their body, but fundamentally different. Hence, they will respond differently to different treatments, and selection needs to be made. So that's all fine, but the problem is the disease is dynamic, so that over time it changes, and the treatment decisions that are made based on the initial tissue biopsy become out of date, and doctors have to guess at the moment. So really there's a need for ongoing diagnosis throughout the whole course of the disease. And we're seeking in Angle PLC to pioneer that by providing blood tests which can recover cancer cells from the patient blood sample, and then they can be interrogated as often as needed, maybe every 3 months, every 6 months, to work out, is the current treatment regime being successful? Is the disease progressing, or is it in remission? What would be the best treatment decision to make now, etc. I'll give you one more stat, then I'll stop, which is that if you look at immunotherapy drugs, which is one of the sort of bastions of new approaches, they're very expensive. Right, so $135,000 average cost per patient, and yet they work for 1 in 5 patients. So what does that mean? That means that 4/5 of that $135,000 per patient is wasted. So that's a tremendous waste of resources. And the second thing is that the patients, 4 out of 5 patients, get no benefit from the treatment. They have toxic side effects, and they don't go on to a treatment that would have helped them. So I think we need to be much smarter about diagnosis, not only diagnosis of the existence of the cancer, but diagnosis of which treatments would be appropriate for patients. And that would improve patient outcomes and also reduce healthcare costs.
And Craig, I suppose you mentioned QFIT, and so which is probably a slightly different view from a use of systematic screening. So it's probably worth touching a bit more on that. And I suppose the benefit of again, sort of the early detection from your perspective.
So that's early detection, but for me, diagnostics is there's screening, there's diagnostics, there's monitoring and ongoing monitoring, and the less invasive those screening and diagnostics become, then the more you're able to monitor patients. So something like a QFIT test is a very sensitive test. It's very non-invasive for the patient, and it gives a physician an indication that something might need to be done. So it's starting to give you that criticality of a situation. And give you a very clear indication that there might be something to be done. That patient I spoke to about earlier on, she could have turned up and had a tiny little lesion on the inside of her colon and nothing needed to be done. But it was a good enough indication to focus the resources of endoscopy on that patient, because she was also an early age. She's 40 years old. I also think that early and sophisticated diagnostics that are less invasive mean that you can start to screen and monitor patients much earlier in their life. So whether it's the lady before, we're talking about watches that we monitor all sorts of things. Monitoring things so that you can do something about things when they need to be done is equally important. And I think as what we see is a lot of patients in the population that our products are going for, you see spikes in earlier diagnosis rates, which are kind of surprising in some cases, where it's affecting people or certain types of the population much earlier in life, when actually looking and being very mindful of what the diagnostics can tell you about how specifically or how critical that indication might be for that particular patient. So I think the combination of the accuracy of and the finesse of the diagnostic with the appropriateness of the response is the most important thing, because
I think the accuracy point is absolutely critical. And in colorectal, obviously, you can get in and actually see the tumour, so you can probably be very accurate. The difficulty with a lot of the tests coming through at the moment is that even with the specificity at 99.9%, the prevalence is very low, which means that there will be high levels of false positives. Maybe 5 to 10 times as many people are false positives than true positives, and that creates a massive anxiety issue. And then again, the diagnosis of the cancer may be correct, but it could be an indolent cancer, which might not have progressed. So there's lots of issues there.
Yeah. In fact, we spend a lot of time thinking about the ethics of this screening, because you might say, well, any screening is potentially beneficial. But of course, as you said, not at all. It's about very specific proven tests which have a very low level of false positives, and by the way, false negatives as well, which is even more problematic, which identify disease which might not otherwise have been identified. You think of a whole separate issue, which is if you think you are ill, you are really worried about it. And the thing which matters most to everybody is speed of diagnosis all the way through the pathway. If you ask, do any research about why people access private healthcare, for instance, is to get a diagnosis and to understand. And clearly here, low intervention tests are critical because there is a pathway. If you take the FIT test as opposed to endoscopy, it's clearly much more effective for the patient to have a low intervention test which gives them a degree of reassurance, and then have the very small number of people, and it is very small, who then need an endoscopy go on. So the balance of technology and just a human factor of being treated quickly and with empathy, I think there is a transformation beginning to happen. And then further down the road, you've got technological transformations in endoscopy, for instance, which make them less invasive, more effective, better ability to take biopsies. So it all comes back to human beings. All of us have an illness. We all know how worrying it is, or they have a relative who's ill, and getting that diagnosis pathway down. And then you get into the much more worrying areas like cancer, where these technologies which allow you to be much more specific in diagnosis. Immunotherapy, 4 years ago, we did almost none. It's now 30 to 40% of all our cancer treatments. But of course we know it either works or it doesn't work. And at the moment it's quite hard to know when to apply it. So all these advances are quite critical for the human beings at the centre of these medical conditions.
So on the immunotherapy point, the two FDA-cleared diagnostics are looking at the PD-L1 protein on tissue. But the problem is the tissue biopsy is extracted from the patient maybe 2 to 5 years ahead of the treatment decision. So what we're pioneering in that case is recovering living cancer cells in real time from the patient blood and assessing the PD-L1 status today. And that we think will solve that problem. Sounds like we should talk.
I mean, Emma, this in particular specifics, and as we think about biomarkers going forwards, I mean, how are you working, again with pharma in terms of moving that forwards? How open, and again, are you liaising with some big diagnostic companies to sort of try and bring a genomic approach to this?
So some of the earlier discussions today have been about how to do that scale up from sort of mid-growth companies. And as we think about this from a Oxford Nanopore perspective, given the breadth of opportunity, the scale of the challenge that we're talking about on the panel here for diagnostics, we recognise from an Oxford Nanopore perspective our core capabilities lie around the nanopore sequencing. That's where the more than $1 billion of research and development's happened over the last 18 years. So to get at the scale and global challenge that we think nanopore sequencing can help with, we are proactively looking at a number of partnerships there. Some of them are going to be smaller scale, some of them relate to aspects of the end-to-end pathway we know we're going to need to be successful in diagnostics beyond just the sequencing element, to get the prep of the sample that we're describing right, to get the bioinformatics pipelines to have the right level of automation so we can move from what is largely today a research approach to a much more clinical diagnostic friendly plug-and-play approach. So to do that, pharma partners are clearly, for the reasons we've been discussing, going to be a number many of whom are already familiar with nanopore sequencing in a research capacity. But they, for certain companion diagnostics, the role of nanopore sequencing presents quite a neat commercial model. We've also recently announced a partnership with Umerah, which is a global diagnostics player, because we recognise that the current customers we serve in a life science research tools setting are different from the ones that we need to, as we take this technology now into new customer segments in the, for example, diagnostic lab settings. So Umerah is an example of a global diagnostics player. There will be others. The same is true as we think about what this technology is going to look like for cancer and other genetic disorders, because those companies and partners will bring the expertise, not just in what the customer wants, but how it can be used and how we can scale rapidly into those target markets.
I mean, Emma, earlier you talked about the speed of diagnosis, and then Justin, you talked about waiting lists. When you think about access, and that speed to treatment, where, Justin, do you think the pinch points are, and how are we dealing with them?
So the first pinch point is GPs. So, by the way, 72% of people wish their first diagnosis interaction to be with a human being. So that's clear. So the people part of this, it's for a different conference, but it is fundamental, because they want to have a holistic overview. They want to be seen by somebody, and they either want assurance or they want to know they've been put on the right pathway. At that point, it's where both digitisation and technology starts kicking in. People are much more open to a digitised pathway post a first consultation, getting their diagnosis online, follow-up online consultations once they've had that first interaction. And of course, that frees up a lot of human capital. The next piece is low complex interventions to identify quickly disease. The health system in any country cannot cope with traditional technologies and the amount of diagnosis which is needed. So this ability to filter out those who don't need further diagnostic interventional tests is probably the thing which is going to make the most difference to healthcare if we're going to cope. And then you get into the third piece, it's how do you make them more specific, how do you do them more efficiently, and how do you make the rest of the pathway much more effective. But I think you start with leveraging human capital for where it's absolutely needed, the human interaction, and then filtering out people as quickly as possible from this strained system. That's what I see.
And there's a lot of discussion about, again, point of care and sending things off to labs, getting back 6 weeks later. And again, so Andrew, I don't know how you feel about importance of point of care diagnostics. Again, there's huge technical innovation coming through in that space. Whether that's again something that you look at and think about.
I guess the way I look at it is improving the accuracy of the tests is absolutely critical, and making them as non-invasive as possible. So the prostate cancer example I gave, that's a pretty invasive test, and it's not that successful. So often people have repeat prostate biopsy tests over a period of years before they're diagnosed, and they're all invasive. So what we would prefer to do is to have something that's much more simple, such as a blood test. Now, if it is a blood test-based approach, that blood draw can be done anywhere. It can be even in times of COVID, for example. It could have been the government could have had a PPE phlebotomist go to somebody's house and draw blood from patients and do diagnostics that way, but they chose to basically scare people away from hospitals, and that didn't happen. So I would very much like to see much better tests which are highly accurate and looking for analytes which are specific. So what the Angles Parsortix system does is it recovers living cancer cells from the patient blood. They cannot be there if the patient does not have cancer, and the more that are there, the more aggressive and progressive that cancer is. That's very different from current prostate tests of PSA, for example, prostate-specific antigen, which has a 75% false positive rate. Why? Because it's a protein that's free-floating in the blood, which may be related to prostate cancer, probably is, but can be related to other things like strenuous cycling at the weekend, quite literally. And then you've got other cancers like ovarian cancer, where women have got an abnormal pelvic mass which needs surgery. It's critical for the surgeons to know whether it's ovarian cancer or whether it's a benign condition. Most are benign, but in this country we don't have a good way of determining. We try and use MRI imaging, but it doesn't work very well. So often you get ovarian cancer patients who are treated as if they've got a benign condition, and that is very, very bad for them. That's why our mortality rate in the UK from ovarian cancer is higher than many other countries. So if you can have a blood test which can actually tell you pretty accurately, this patient has got cancer, she needs to go down this pathway, or this one hasn't, there's no rush, she can have keyhole surgery. So that's what I think. I think the solution is finding specific analytes which are absolutely 100% specific, which is what the living cancer cells are, and then having simple blood tests to basically discriminate different types of condition.
Well, you're touching there on companies, should we say, take Grail and others who have talked a lot about liquid biopsy. Your approach is very different, and it is one about accuracy. Is that the right way to think about it?
Yeah, so the previous panel was talking about access to capital, and regrettably the Americans have a lot of access to capital. So Grail had $2 billion of Series A funding. Think about that. But their analyte is circulating tumour DNA, which is fragments of dead cancer cells. Now that is not a specific analyte, and the reason is that all of us over time will have malignant cells in our body. It's an age-related condition. In fact, there's been studies showing that over 65 years of age, 25% of us will have circulating tumour DNA in our blood when we do not have cancer. Why? Because our immune system has killed the malignant cell and it's not growing. So there's a fundamental issue with analysing circulating tumour DNA, which is fragments of dead cancer cells, as to whether or not they're representative of something that's growing. Whereas a living cancer cell circulating in the blood and trying to metastasize is very specific. I should do the one bit of party political. We're keen to work with those kinds of companies, by the way, because you can do circulating tumour DNA and circulating tumour cells from the same blood sample.
And because there's a lot of talk about personalised medicine. Clearly from a sequencing perspective, you probably don't get more personalised. But again, how do you think about personalised medicine and what you're doing from a genomic perspective?
So I think from a nanopore perspective, we see, a lot of these innovations that we're talking about are all on the path to personalised medicine. That isn't how healthcare is delivered today. That isn't how I was trained as a doctor, and too few healthcare professionals, health systems, patients ultimately actually have the opportunity to really have the sort of personalised medicine that we know already in the evidence is going to make a difference, not just to their experience, but to their outcomes and mortality rates as well. So from a nanopore perspective, we are actually looking at how long-read sequencing can be used for both living and dead cancer cell detection in cell-free DNA, looking at people's blood samples, but we're at a stage of demonstrating, working with key opinion leaders globally, around what the evidence base is. And then I think what we need to be mindful of is that we're almost providing the tools here, and it raises a whole bunch of kind of moral and ethical questions around how we want to allocate resources to embed this technology and innovation into healthcare systems. And our goal is to make sure that we are publishing the evidence base on what this technology can now do, which is far more accurate than it was even just 2 or 3 years ago. So this technology is moving fast. We know already that we've got massive waiting lists. We've got ischemic healthcare systems across the developed world as a result. And when you try and implement new technology and new innovation, it actually often costs more, both in terms of time and people, to get it started. You can't immediately pull the cost savings out. And so it's imperative that from a healthcare system leadership perspective, we'll also think about how we can pump prime some of these innovations to learn not just what they can do, but how we can implement them optimally.
And Justin, from your perspective, personalised medicine, what are you doing to personalise the approach?
Well, it happens to be in our purpose, which is outstanding personalised care, as you know. So personalised is about people. The last speaker spoke very powerfully about the lack of attention paid to women's health. 500,000 women on the gynaecology waiting list. It would be far more than that if it were a personalised system which were listening and thinking about people's specific needs. So personalisation does start with listening and making it about the patient and not generic programs. So I would make that point. I would clearly, as the diagnoses get more specific, you end up with genetically specific treatments. And I suspect towards the end of the decade, that's going to start being a really big feature. Today, it's about pathways in particular. I would also just put a shout out for imaging, which we haven't talked about. So probably the big technological revolution for the next 5 years is going to be in imaging. That really is coming of age in its ability to provide much more personalised. If anybody's seen a CT scan of a heart, then you begin to understand the different sense of personalised medicine, where you can specifically see, even if you don't know what you're doing, you can see specific areas of the heart and understand what's going on. So I think there's many features to personalised, some of them very technological, some of them are here today and will get scaled from an imaging and other perspective. But let's just keep remembering, there are people at the heart of this, and it does start with a system that actually cares and listens to them.
Craig, one of the key debates always in both diagnostics and medtech actually is less the scientific, but actually the commercialization, because a lot of companies fail on commercialization. What's your views around commercialization and adoption of new technology and ease and frustrations as you see it?
Ease, I'm not sure about that word in the statement. Fundamentally, it's difficult. I think one of the speakers earlier on said, starting and building businesses is difficult. It doesn't matter which environment you're in. First of all, I think you have to have a product that it fits the indication that it's going for, first and foremost, and specifically with the indication of that patient or that patient population in mind. In terms of commercialising here in the UK, I think the NHS has been great for us in terms of proving some of the proof points that we needed to do in the early stages. But to get to that mass adoption, we're just coming through the process of that with NICE, but that in itself can be quite a frustrating process to go through. In the US, it's a different environment when it comes to reimbursement. The particular markets that we're working in, some have and some don't have reimbursement. So getting access to academic centres, where those centres seem to be quite, for us, in our experience anyway, very open to adopting new technology in their particular funded practice. But going from that stage where you've got adoption and cases in an academic centre before you get into the routine of endoscopy, in our example, or pulmonology with our partners, is a different ballgame, and that does require reimbursement, which takes a lot of time, and that takes data at the end of the day. But I think if you've got a great product that does what it needs to do for the patient, and it fits in an augmented world where we work with endoscopy partners, endoscopy companies, imaging companies, so augmenting personalised imaging in the lung, for example, where they're able to navigate under real-time guidance, which is unique to that patient, and our technology can access the point of care in a very precise way. And we also have software that can intraprocedurally diagnose the tissue, so we can detect the state of that particular tissue at the point of care. And if you're taking a biopsy, but you can deliver some therapy at that point in time, then you've got an option of preventing something from becoming cancer before it's even got there. So having a great product works first, but the hard yards of getting out there and selling is always going to be difficult, and reimbursement is always going to be the other challenge. The final thing I'd say is the ever-changing regulatory environment, which MDR, MDD in Europe has just been a moving goalpost for us for the last 5, 6, 7 years. It doesn't change. They've moved the goalposts again. The FDA's approach changes from every few years, and we just have to navigate that world, but it just makes it more difficult every year that goes by, basically, from our experience.
Andrew, I'm sure you found it really easy, both from a commercialization perspective, and maybe we do commercialization first and then we come back to approval, because I suspect that we may run out of time on approval. But let's start on commercialization.
It's simple to commercialise, yes, of course. No, it's extremely challenging to bring a healthcare product to market. In our own case, we went for the FDA product clearance. We were the only company in the world that's achieved that. It took us 6.5 years, processed 16,000 samples, and wrote 400 technical reports and documents in submission. And it took us 18 months to get them to give us the questions that we then had to answer. So very difficult to get the regulatory clearance. But even then, beyond that, getting reimbursement is very challenging. We've taken a very commercial approach to our business. So we have several different business elements. We have a pharma services business where we're working for pharmaceutical companies to help them with cancer drug trials, and that is immediate revenue today, and it's growing fast, and we've got some big customers as a result. But we did that deliberately to bridge the gap that we can see to getting the clinical revenues, because we've got a fantastic product, but getting a very, very conservative, bureaucratic set of organisations around the world to adopt. I'll give you one example. We'd like reimbursement in the United States. The American Medical Association gives out the reimbursement codes. You have to put in, quite understandably, submit a lot of information. And one of the preconditions is that you can show that it's already widely used for clinical use. So how do you do that? If the clinical users can't use it if they haven't got a reimbursement code, but you can't get the reimbursement code unless you can show it's been widely used. So there's lots of things like that. But I think the most important attribute is resilience. Keep going.
Justin, from your perspective, in terms of payer adoption, I mean, we were talking about the UK, the Minister was talking about the NHS earlier. How do you feel about adoption of technology from a UK perspective? Where, you know, who is a driver of it, as a starting point?
So I think increasingly providers will be, actually. So I think the world is changing a bit. 5 years ago, we found technology, somebody would come along and ask, can we use it in your hospital? We're now beginning to want to drive it. And I spent a lot of time, I met with a robotics company yesterday, thinking, how do we drive it? One of the reasons for that is if people self-pay, then you can offer them that treatment without having to go through some of the hoops you have to go through. For instance, if an insurer is to reimburse for it. So I think there's quite a degree of lag, actually, when it comes to... The NHS clearly is both restrictive because it's got restrictive funds and innovative. So it's sort of both things at the same time. The insurers, I think, generally are cautious about new technology. I think that's a problem because I think that's a bad deal for patients. So, but I think that will change. And I think the reason that will change is because the self-pay market, you can be innovative. Clearly it has to be MHRA approved. It doesn't always have to be NICE approved. It clearly has to be clinically effective. But you can essentially provide a price for a service. So I think innovation may actually start being driven more by the private sector. I think there are also problems for some of these technologies to prove their cost effectiveness, but not their outcome effectiveness. Okay, so perhaps we're in an environment in which if there is a price for it, you can focus on outcome effectiveness rather than always trying to solve for the cost effectiveness. And robotics is a good example of that. It's not been proven to be cost effective yet. It is increasingly been proven to have a really good outcome. So we did 2,000 robotic operations last year. I expect that to go up dramatically in the months and years ahead. So the payer dynamic is key. I also think the landscape is changing.
Craig, on robotics, given the fact we just raised it, again, it's clearly a key part of your future. What's your view, again, picking up the cost and outcome point as well?
So the specific area of robotics where we've done a lot of work is around lung cancer detection and robotic diagnostics within the lung. It's an underserved sort of market in terms of the accuracy and the diagnostic yields with biopsy and physical biopsies. So it's, to me, the cost of dealing with those symptomatic critical patients is enormous when it comes to the comparison to that with some of the other cancers. And there aren't any accurate screening or diagnostic tests really in the market yet to determine that, other than some basic CT scans and imaging. But the imaging is changing all of the time, and the access to these lesions is improving all of the time. So I think the overall, if you take a holistic step back approach, you're diagnosing early at that stage. If you have a non-toxic or a treatment option which has limited toxicity to the patient, and it's convenient, and so it can be done at the same time, so on a see and treat episode, then you've got an opportunity to influence the outcome. Is it going to solve lung cancer? Of course it's not, but you've got something that is appropriate. So, but if you start screening patients with these sort of platforms as they get better and better, you are going to find a lot of indications from an imaging perspective that even then are going to be non-conclusive and may not be accurate. But patients don't want to be told to go home and don't worry about it for 12 months and come back and have another scan and we'll tell you whether it's a problem or not. If there's an opportunity to treat the precancerous or even that particular lesion at the point of diagnosis, then you're dealing with the patient and the individual at that case, as well as potentially changing the overall outcome and avoiding surgery. I mean, that's the ultimate, really, to try and avoid complex, difficult surgery, which is historically where a lot of the robotics has been. So I think I see a world where robotics is going to be doing a lot more than just helping doctors in a more stable platform chop and cauterize and cut their way through patients. It's going to be used for a multitude of different types of applications that may even augment diagnostics in the future.
So I was going to ask a different question, but I will ask this as a starting point, which I think probably is one for you, Justin, which is, with challenging times in the primary care sector, Babylon, etc., how do we make diagnostics and the delivery of in-person care profitable in the UK?
Well, we are profitable. So let me come back to the point of care testing, because actually the answer lies there in part. So point of care testing for a while went to having all the tests in each particular area and being able to test people in 5 minutes was the answer. But of course the tests have become a lot more sophisticated. So we have a lab network for the whole of Slough. We've centralised it. We take bloods, but then in a number of hours we can have those tested and digitally sent back. So the answer, of course, is scale and digitisation. And we haven't talked about AI yet in its early days, but the use of information to be targeted and to digitise and to be able to distribute information clearly moves from having lots of people in every place to you can take a blood anywhere, as you've said, and then being able to concentrate your resources in relatively capital intensive but highly effective treatments. So that's part of the answer. Primary care is much more difficult to make profitable than secondary care. That's always been the case. We are trying to prove the case for making it profitable by, first of all, focusing it on the private arena, secondly, investing in the technology behind testing, but also sort of expanding the types of services which you offer there. So I think it can be made more profitable. You still come back to the workforce. So one of the answers is it's a lot more profitable if you have a stable, highly engaged workforce who are highly motivated, who give discretionary effort because they care. So the other part of the answer is really look after your workforce. It's the topic for the other conference which needs to be held.
I'm conscious we have 3 minutes left, so if there are any questions from the audience, please stick your hand up. Otherwise, Emma, is the UK pioneering or lagging from a sort of technology perspective in driving of this?
So let me answer that a bit from our experience in the sequencing landscape here, which is that when David Cameron was Prime Minister, he recognised there was a challenge in bringing not just genomics but actually new technologies and innovation into the NHS. So one of the interventions that he made was to set up a body reporting to the Department of Health and Social Care called Genomics England, which was set up to advance research and then in parallel to embed that into the NHS, recognising it in the absence of having dedicated ring-fenced resource to both advance the research and focus on the innovation. The UK may remain in a lagging position, and I think that Genomics England is looked to globally as being a leader in how to do that in a what is often quite an entrenched, impermeable healthcare system. And Genomics England has focused on cancer. It's launching newborn screening. It's also looking at data diversity. So it's picked a few big rocks to go at. I think so that's an example where I think the UK is and has been and continues to be pioneering. I think in the absence of some of the follow through, which we've touched on some of the levers around reimbursement, around regulatory, that's where there remain lots of bureaucratic systems here, which make it challenging and at risk of being lagging when there are other health systems, countries and governments globally who are actually looking to leapfrog to new technologies. And we were just hearing about how this is sort of centralised approach to diagnostics. But when the diagnostics start to look like this, when they're just really small devices that actually don't necessarily even need to be in a lab, it completely challenges the business model around what needs to be centralised from a tech perspective and raises different questions around how you organise a workforce around what's fundamentally more decentralised and closer to patient care in its approach.
I'm going to stop you, James, I'm sorry. Yep. No. I, for one, could happily sit and listen to much more, but I'm afraid time is pressing. Thank you, James and panellists. If I could please ask you to be back in here by 11:15. Coffee awaits outside. time to restart. Sorry to cut the break short, but thank you also for coming back in quickly. So, next up, Ash is back up, and I'm looking for Lisa. She's here. Great. Over to you. Our next private company.
Introducing Lisa Patel from Istesso.
Istesso.
Istesso, there we go.
Well, thank you so much for inviting me to present at this meeting. It's a really, really exciting time for Istesso as a company. So we are at the forefront of a new and emerging field of science called metabolic reprogramming. And we think that that is going to completely revolutionize the treatment of chronic diseases, including diseases of autoimmunity and of fibrosis. Our lead product is called MBS 2320. It's a first-in-class small molecule drug, and it's shown remarkable results across a range of different disorders, and that includes clinical data in rheumatoid arthritis, which substantially de-risk the asset. Behind that, we've got a groundbreaking portfolio that's rapidly progressing, and which we think will reach a significant value inflection within 15 months, giving us the potential to build a UK biopharmaceutical champion. So the diseases that we're working on actually are an enormous threat to society. Our lead indications are in autoimmunity, and these are conditions that occur primarily when your immune system fails to remember that you are you. So they mount a chronic and persistent attack. You'll have heard of some of the conditions that result from that. Rheumatoid arthritis affects about 20 million people worldwide, but other conditions like type 1 diabetes, multiple sclerosis, and inflammatory bowel disease. The diseases are extremely difficult to both diagnose and to treat, and that's reflected in their enormous annual cost. So in the US alone, the annual cost is estimated at in excess of $100 billion per annum. Given the scale of the problem, it's not a surprise that the drugs that treat these conditions actually are very commercially successful. The category as a whole achieves in excess of $40 billion per annum. It includes drugs like Umerah, which until recently was the biggest selling drug in the world, as well as a number of the other top 10 products. But actually, despite their commercial success, these drugs have a number of really serious limitations. So Andrew earlier mentioned the low responsiveness of patients to immunotherapy. If you take Umerah, maybe 4 out of 10 people are not going to respond. Those who do respond may achieve a 20% improvement in their symptoms. There are some serious side effects. So if you take these drugs, you've got an increased risk of infections or of major cardiovascular events. So your chance of having a stroke or a heart attack is increased. But maybe even more importantly than that, if you're a patient taking these drugs, the best you can achieve is symptom control. There's no potential for you to repair or ultimately to resolve your disease. And the reason for that is because these drugs, which as a category are called the immunosuppressants, these drugs work effectively as a simple switch. So they turn off the immune system to control your symptoms. But what they're also doing when they do that is they're turning off your repair potential. So your body actually just can't mount the processes it needs to fix the underlying damage. Our approach, metabolic reprogramming, is more like a smart switch for the immune system. And what it does is it allows your body to control the attack, control your symptoms, but really importantly, it supports the underlying ability of the body to repair the damage that occurs in these diseases. Now, that's something that can't be achieved with the existing drugs. But what's really important as well is it can do it while preserving your natural immunity, so you don't have an increased risk of infections. Our lead drug, MBS 2320, illustrates these benefits, and I'll show you some of the data that we have. So this is an oral small molecule. It's just a once daily pill. And it changes the way that mitochondria, which are the powerhouse of your cells, the place where all of the energy is generated, process that energy. And by doing that, MBS 2320 generates some really remarkable biological data. So this is an animal model of arthritis. The animals have the same kinds of symptoms as humans will get with rheumatoid arthritis, and also the same underlying damage. Now you can see that in the graph on the left, MBS 2320 is controlling symptoms at least as well as a drug called Enbrel. Now that's a drug that sold $6 billion in 2021 for rheumatoid arthritis. That would be really brilliant by itself, but actually when you look inside the bones, you see something really, really unique, and I'm showing you something that actually has never been published with any other drug before. And in the top panel, you can see this red staining that's circled. Now, that's an area where the animal has something in its bone called a bone erosion. Effectively, that's a hole in your bone that is happening because of the immune attack. The red staining is new bone that's being laid down in that area of damage. So effectively, what the drug is doing is it's causing your body to repair itself. That hole is getting filled in. In contrast, the standard of care drug, this is another immunosuppressant in the panel below, doesn't cause anything like that response. And we actually see a very similar profile in humans. So these are data from a phase 2 exploratory study of MBS 2320 in patients with really, really severe rheumatoid arthritis. On the left, you can see that the compound increases clinical responses. This is a standard measure, the ACR, and it does it really, really well compared to placebo. What's really exciting, though, given it was just a 12-week study, is that in the hands of the patients, we're starting to see the bone remodeling and this repair response starting to occur. That's extremely unexpected at a 12-week time point. It's very, very early if you're looking at the natural history of a disease like rheumatoid arthritis. But on top of that, I mentioned earlier that the current drugs increase your infection rates. Now, that can be quite serious. Patients are at increased risk of tuberculosis, and that can be fatal in instances. I've given some examples of data for the current drugs, Rinvoq and Jyseleca. Rinvoq sold about $2 billion last year. In contrast, MBS 2320 treatment reduced your risk of infections by 40%, which is a really, really encouraging safety result at this early stage of development. But actually, the compound doesn't just show this profile of controlling symptoms and improving the underlying disease in just autoimmunity. It also does it in lung disease. So this is data from a model of a disease called lung fibrosis. It's a progressive scarring of your lungs that stops you from being able to breathe over time, and it's fatal within 3 years. In this model, MBS 2320 controls the scarring more effectively than a drug called Ofev. That's the lead product. It sold $4 billion in 2021. But really importantly, uniquely in this space, the compound restores function to the lungs. So where other drugs will leave the scarring in place, this red staining that you can see in the middle panel is a sign that the lungs are starting to function normally. They're producing mucus. That's improving your ability to exchange oxygen, and you're able to breathe more easily. The Food and Drug Administration recognized that profile by granting the compound a fast-track designation last year. So we're hugely ambitious for this science, and our pipeline milestones reflect that. MBS 2320 should reach the end of its phase 2b within the next 15 months, and our second product is going to enter the clinic soon after that. To give you a sense of the scale of deal that could be achieved at the end of that, the most recent deal in the autoimmune space was for $10 billion, a cash acquisition of Prometheus by Merck about 3 weeks ago. So just to summarize, we're at the forefront of a new field of science. We've got a pipeline that's developing rapidly and that should deliver value inflection within the next 15 months. We think we're well poised to deliver a new UK biopharmaceutical company. And I'd like to thank you very much for your time.
So thank you for your presentation. Any questions from the audience? I've got one, if not, if that's okay.
Yeah.
Love to hear, we're here talking about capital markets and financings. Love to hear a bit more about the financing stories of the business so far and what ongoing requirements might be going forward.
Yep. So our lead shareholder is IP Group. They've supported us since the beginning when the Forerunner IP was in license from the University of Aberdeen. IP Group have been the lead investor throughout, up to this stage. The company wouldn't exist, actually, if it hadn't been for the support of Innovate UK, formerly the Biomedical Catalyst. They've invested $6 million on a non-dilutive basis. And we've also had pharmaceutical company support. There's been very little venture capital support for this particular company.
Very interesting.
In terms of next stages, At the end of phase 2B, we would expect either a partnership deal to generate revenues to enable us to continue to develop the rest of the pipeline, or to be raising a significant amount of capital to support phase 3 development.
Super interesting. And the company is mainly based in the UK?
It's King's Cross.
King's Cross down the road. There we go. From the front.
Hi. Beautiful presentation. Thank you very much. I just wondered if you've also considered going to the MHRA for Innovation Passport. I don't know. We got one recently, and we're not in clinical stage yet. And you've got phase 2, and I'm just wondering, because you've got FDA approval, I'm wondering why you didn't go to the MHRA.
We are planning to go to the MHRA. In our current phase 2B study, we're collecting data to show that we're actually repairing the patient's disease. And with that in hand, we're expecting to go for the Innovation Passport, but also for a EU Prime designation. Actually, on the back of that, we expect that the drug will be eligible for a breakthrough designation as well in the US.
Fantastic. Thank you very much.
Thanks, guys. Simon. Thank you, thank you, thank you. Our third panel, led by Simon Conway. Please come up, if you would. Oh.
Trying to do that again. Enough chairs? Yeah. Great. Well, my name is Simon Conway. I'm a Senior Managing Director within the Healthcare and Life Sciences practice at FTI Consulting, and it's my great pleasure to moderate this final panel of the morning. And, health inequality, health inequities is a word that I think, historically has been probably whispered, but is now gaining ever greater prominence in the thoughts of leaderships for various different reasons. And healthcare, as you know, is a very, very broad sector encompassing a wide range of businesses. And in front of us, we have the leadership from a very diverse range to talk about the inequalities and inequities that they are seeing and considering the patient groups of the businesses that they lead. I thought, by way of introduction, actually, of just going around the chairs, and actually if the individuals introduce themselves, introduce their business, and perhaps just sort of touch on some of the inequalities and equities that they're seeing, and hopefully we'll see some very contrasting viewpoints of what those inequities are from their perspective. Jess.
Thank you very much. Hi everyone, really excited to be here and part of the discussion today. I'm Jess McCready, a health tech investor at Octopus Ventures. We invest in software-enabled companies. My focus, as I said, is within healthcare. And one of the many challenges that digitisation of platforms and solutions brings is that there's an accessibility challenge that opens up to individuals or healthcare, for example, that are not digitally enabled. So that would be one area I think would be exciting to touch on today.
Great, hello everybody, pleasure to be here. So my name's Sarah Howell, I'm the CEO of Arrowcore Therapeutics. We are a UK-listed, AIM-listed biotech business. Our focus is very much on transforming patient care by enhancing existing therapeutic medicines so that they are safer, more effective, and importantly for today, affordable. We're a clinical stage company within the diabetes space. There we're making faster acting insulins to help people with diabetes better manage their blood glucose. And I think today I'll talk a little bit more around diabetes, some of the socio-economic impacts we see of that, the link with obesity, both diabetes and obesity at pandemic levels now, and how that access to care and treatments really impacts on outcomes for those patients.
Good morning, everyone. My name's James Harrison. I founded Cycle Pharmaceuticals just over 11 years ago. We're a private company. We have an annualized sales rate of about $100 million today, profitable for the last 4 years. Our business is all in the US. We've developed and manufacture and sell 4 medicines in the US. Our home stadium is metabolic rare diseases, but we've recently expanded into a horrible swelling disease called hereditary angioedema, and we launched a multiple sclerosis drug 3 months ago. I now have more people across in the US than the UK. We have our own sales team, our own patient support team. So I have 8 dietitians, a similar amount of nurses, because actually we provide products, but we probably sell services, and the holistic care that children, their families, their carers, and the village of healthcare professionals need in order to look after a patient with such lifelong and life-changing needs. Inequalities we see loads of. Lots of types of inequality. I think one that is prevalent in the medical world that we don't see is gender inequality, in that unfortunately boys and girls are born with genetic diseases, and a major gender inequality in medicine is that clinical trials define doses according to a man. Fortunately, in our little corner of the medical world, tends to be dose titration, and children are brought up to an effective dose. So whilst gender inequality is very present in our industry, in our little corner we don't see that. What we do see though is wealth inequality. We see race and cultural inequality. Consanguinity is the term in medicine. If you are in a culture, your background where you partner with people that are within your family, and let's be specific, if you have a child with your first cousin, because of the joined family, you have a 20 times higher chance of having a child with one of the rare conditions we treat. So people from cultures such as the Indian, Pakistani, Bangladeshi culture, we treat a lot of them. We deal with geographic inequality, and frankly age inequality. We are privileged to treat the young, and it's humbling to do so.
Hi everyone, I'm Tim Barker, I'm the CEO of Keynote. We're a small cap public listed company on AIM. I feel like the outlier in the room here because we are focused on mental health, not physical health. But yeah, 1 in 5 of us every year will need support for our mental health. If you look at the younger generation, of those of you that have got kids, you'll know all the trends are moving in the wrong direction. So Keynote was founded 20 years ago with an initial focus on supporting young people. Our biggest customer is the NHS. We're free serviced in these 17 million across the UK. And a couple of months ago, we won a substantial contract in California to roll out our service to the entire state's teens. Such is the level of demand to tackle this urgent crisis. In terms of health inequalities, look, it's not making headline news, but the NHS is going through the largest transformation in its history as it reorganises itself into integrated care systems, with maybe 4 or 5 key priorities: population health, early intervention, health inequality, and transformation through digital and data. So if we got the time, I'll talk more about the opportunity within the NHS to tackle health inequality, which in the mental health space is often referred to as seldom heard groups that might culturally or otherwise be underserved or be more reluctant to use established services. So co-design and participation is the route to design services, and digital provides an incredible opportunity to do that because we're all using personalised devices and personalised apps. So apps that get to know you and support you individually as opposed to just as a cohort is an exciting part of the future.
Thank you. Good morning, everyone. My name's Ian McGill. I'm CEO for a company called Quell Therapeutics. Quell, we're, again, in the autoimmune, inflammation, and broadly immune dysregulation field. And, our goal is essentially to control those diseases in a one-and-done way. And we do that using cell therapy. Cell therapy is an expensive field. One of the sessions this morning was talking about how do UK-based companies acquire the capital that you need. We've taken on a little over $300 million worth of capital, and as a company that's 4 years in, that's a pretty fast growth. That capital's come probably about 50% from the UK and 50% from the US. We're a clinical stage company, and the way we are trying to tackle the problems is by taking a subset of T cells from an individual. After COVID, everyone knows what a T cell is, right? It's the cell that attacks and kills viruses. We're taking another subset of T cells that is T regulatory cells. They're about 5% of the T cell population. And if you like, they're the natural coaches of the immune system. They teach the other cells how to behave. And what we do is we take them from an individual patient, we sort them out, throwing away the rest of the T cells and the B cells, and then we genetically engineer them. And through genetically engineering them, you can send them effectively to places in the body with purpose, and when they get there, they can suppress in a directed way. So, for example, in diseases like multiple sclerosis, you can find ways of sending them to the brain. For type 1 diabetes, you can send them to the pancreas. For IBD, you can send them to the gut, or for protection of organ rejection, you can send them to a transplanted organ, and that's actually where we're starting. I said it's a very expensive field as a biotech, but it's also going to be an expensive commercial product when it's commercialized and it's out there. But if you think about the slide that actually Lisa showed earlier, that showed that huge amount of cash that healthcare systems currently spend on treating those conditions, it's billions and billions of dollars. There's cash there. That's clear. I think the challenge is in the field of cell and gene, which we're broadly in, when you look at those gene therapies that are coming out in a one and done way, hopefully to remove some of those genetic conditions, when you're looking at autoimmunity and when you're looking at cancer, there are treatments now that in a one and done way might be able to cure disease for life. That patient currently in the system through their life may be accruing many, many millions of dollars or pounds worth of cost for any given healthcare system. If you're bringing a product to the market and that product has a price point of 300 to 500,000, that's a massive saving, a saving over many of years. But the challenge is the healthcare system is just simply not set up for the huge number of sort of revolutionary cell and gene type therapies that are coming through. And I think the kind of inequality that I want to sort of point out is something that is potentially looming. Looming because whilst the cash is there, the system's simply not set up such that patients will be able to receive access. So, we're not talking here necessarily about your socioeconomic background, we're not talking about your sex, your race, or anything like that. It's whether or not the system that you're part of is ready and prepared to be able to give you access to healthcare interventions that could be curative.
Thank you. And I guess more generally, I think there's maybe a perception that innovation per se, when applied to drugs and other sectors as well, means you end up with a premium priced product, which perhaps excludes either health systems or individuals from actually accessing that. Do you think that's sort of necessarily a universal thing, or do you think that there is scope or there needs to be found a way to actually get over that to access these products, these devices, these drugs?
Maybe I'll comment first. I think there's two ways of looking at that. Our core, we're focused on, enhancing existing medicine, so doing that in a way that it's cost effective. So, we're not looking there at premium pricing. It's more about genuinely improving outcomes for patients without bringing that burden of the cost. But that's, one end of the spectrum. I think the other end of the spectrum we're talking about is then around its cost effectiveness across the board. It's not just the cost of the therapy, is it? It's the cost of that, the cost of the burden on that patient's life, and then the burden on the healthcare system that's holistically treating them. So I think that's where there's room for advancement and improvements within the system as well.
So I'd agree on that. I think that it's really important that as you're sort of founding a company, as you're growing a company and directing technology, that you make a value-based judgment on whether or not you're going to have provide value to a healthcare system. Ultimately, if you're not providing value to patients, to physicians, and to a payer, and to a government, which even in the US is the single largest payer, there's no way you should expect adoption. You simply don't deserve adoption. You know, I said our area is incredibly expensive. The reason it is it's many innovations piled on top of another. There's innovations in the equipment manufacturers, in the reagents, in just simply the chambers that we grow our cells in to be able to do it. And we do it on an individual patient basis. That comes at a cost. There's a lot of IP from the system. A lot of that IP protects some of the revenues that those companies generate. It's going to be expensive. But don't start out on a venture unless you actually believe that you have a big enough value ultimately that you're providing society. Otherwise, you don't deserve the reimbursement. You shouldn't be used.
I think as well the finance industry has a role of responsibility in making sure that valuations are set at a prudent but sustainable level. I think particularly within software-enabled companies, we've seen quite a lot of valuation inflation over the last couple of years. And in particular, a lot of principles that we maybe apply in fintech or B2B SaaS, where statistically it takes much less time to reach that $100 million threshold revenue mark. The same principles should not apply within healthcare because it is more expensive to build health tech companies that are regulated, that are clinically proven within the right customer base.
I think there's a time dimension here, though, in that what matters to patients who are travelling to their doctor in the next few days is my doctor's 6 hours away because he or she is a specialist and that's the person I trust. If I'm not a wealthy person, I worry about where I'm going to stay overnight because I can't make the return journey in one day. And therefore I might not go because the cost of that hotel bill for the night is meaningful in my weekly pay packet. It's these things, it's the real life day-to-day things that matter to patients today, and that informs compliance with medicine, compliance with visiting your healthcare professional in the frequency that you should, and affects your outcome.
And Tim, you mentioned in your opening remarks about some of the inequalities you're seeing within, I guess, a business that has been around for quite some time now. I wonder if you wanted to expand on some of those points.
Yeah, so Q's been around for 20 years, and it's funny when you think about the sort of digital therapeutics versus physical ones. In the software space, we call it product market fit, right? So it probably took us 10 to 12 years to really slowly mature our service to really ensure that we can provide great outcomes at safety and scale. And what's interesting, as we get commissioned, I'm sure you all know the NHS in the last year in England went from 135 clinical commissioning groups, which was about providing internal competition, to then 42 integrated care systems. And essentially they are now super regions. So all of Greater Manchester has gone from 10 clinical commission groups to 1 in Greater Manchester, which is great from a commercial perspective because you can then focus on larger opportunities. But with that, as I mentioned, the integrated care systems now have a responsibility for population health, not public health, population health. Population means every cohort, group, community within the population. So what's been interesting is over the last 3 to 4 years, we've certainly seen high level of scrutiny on what we do, as who's using our service, who's accessing it, and what are you doing to really ensure that you are a welcoming, effective service for all. And I suppose the journey that we've worked on there is really one around the topic of participation has been quite in vogue for over the last probably 5 years or so. You co-design services with your end users. But I think one of the challenges that we found on that is if you're going into a group, an ethnic minority group community within Birmingham, for example, these are not transactional relationships that you're building. They are long-term relationships. And as the community leader of one of these organisations said to me is we move at the speed of trust. Right? So while as a software guy I've got urgency to really get to the answer, it's a long-term commitment to work with communities and organisational groups to do that. What we are doing right now is trying to blend those kind of learnings with the need for sort of speed that we have with the project we're doing in California, we've got to support 19 languages, culturally relevant services. And so we are really recruiting individuals into a cohort where we can, do video diaries, or we can do rapid testing with them. So I think one of the interesting, exciting things here is that if we can move the pace of innovation and the pace of participation up, we can co-design services quickly that really are designed for the broad communities that we have to serve, and in doing so, build at least digital products designed for that. So if we all logged into our own Netflix at home, they'd look completely different because the algorithm is personalised to you, and that's the path that we're going down. Not chat GPT for counsellors, but to personalise on your phone something that's really been curated and designed for you, which you don't get in the physical world or in the typical drug world. Although you get personalised medicine, we're talking about personalised digital sort of therapeutics. So a really interesting time, but incredibly hard work to do at scale.
Just does that sort of resonate with what you're seeing in terms of the digital world, the investments that you worked on?
Yeah, so for us to get excited about any opportunity, it has to, one, improve healthcare outcomes and to reduce costs. As a software investor, you're often looking at opportunities whereby you can access many, not the few. We worry about scalability, we worry about unit economics, we worry about efficiencies. As I said in the opening, one of the challenges that come with a digitised mode of interaction is that not everyone has a smartphone, not everyone has access to a form of internet on an ongoing basis. That's obviously one of the biggest transitions we've seen in all of our lifetimes, and increasingly that is falling away as an issue. But that's not to say that for all that we do have the same privileges that many of us in the room do today. So that is definitely something we worry about. We want solutions to be affordable, and we want them to be able to approach and be used by those that are most in need. And some of the healthcare statistics and correlations that we see are that many of the long-term chronic illnesses as a society we suffer from are more prevalent in sort of lower affordability segments. For example, you're 2.5 times more likely to suffer with type 2 diabetes if you come from a impoverished background. So yes, we definitely do worry about that, but very fortunately digital access is starting to improve, well, significantly has improved over the last 30 to 40 years.
And given the ageing demographic, do you think that has an impact in terms of ability to access digitally enabled services, digitally enabled healthcare, or is that something that's you're not really seeing?
Yeah, I think obviously there's different go-to-market strategies. If you're selling to healthcare or pharma or insurance, it's slightly easier. If you're selling to consumers and trying to target an elderly population, sort of acceptability and trust remains a huge issue today. And it is why sort of some of the direct-to-consumer sort of elderly care tech businesses have maybe taken a little bit longer than, for example, those that are targeting more general population. But yes, definitely. But it's also a trend that you would expect to change increasingly over the next 10 years.
Yeah, that's what you think.
Yeah, and likewise, I mean, the services that we're building right now, we have phone support as a backup, right? So while you're not going to be able to emulate the same digital experience that you've got, if you do want one-to-one support, we're offering a fallback on that. And so there is a minimum amount of technology you need to get the benefit of that. But we do look at how we can fall back to provide a similar service. For example, our service works on any internet device. It doesn't have to be a smartphone. So if you can thoughtfully design it with access being first, then you can develop it in a way to determine what levels of access we'd need. Because if we have a prerequisite that everyone needs an iPhone 13, we clearly are, by design, excluding a large percentage of the population.
I mean, Ian, you mentioned before that with this idea of one and done, there's got to be a rethink of how these things are paid for. Do you think that there are any healthcare systems around the world that are beginning to think about this in the right sort of way? I mean, who do you think are the sort of thought leaders here? Is it the US, or are there other systems that have a sort of more?
So if you look at cell and gene therapy today, obviously the US is where there is more cell and gene therapy conducted than anywhere else, but actually the UK in itself is not doing too badly. The UK actually has one of the higher sort of European and modern developed economy spends on cell and gene therapy. And I think it helps the fact that you have a centralised system in the UK that thinks about how you pay for drugs and how those costs are accrued in a healthcare system over time. If you think about the US potentially longer term is more difficult because you have a number of different payers. And therefore, which payer is going to pick up the $500,000 tab for the patient that is going to get a 50-year benefit from the drug that you're asking them to pay for? So the discussions that are ongoing, which are interesting, is to what extent, for example, can insurance companies get in the middle and factor and effectively still sit with the way the pharmaceutical industry and the healthcare industries work currently, which is you pay on a monthly basis for pills, or you pay every 6 months for an infusion of drug. There's got to be some way of fitting these one-off, potentially once-in-a-lifetime costs over many years. And there's got to be some way that actually allows that to be paid for in a risk-adjusted manner, for some of that cash effectively to come back to the innovating company that's bringing that product through in a way that continues to provide innovation. So I think insurance and factoring is something that's going in the middle as a middleman. And I think in the US you're starting to see many of the middlemen in the healthcare system stepping into that void and starting to think about how they can be the people that buffer the healthcare system and the patient and the insurance companies.
I mean, in terms of maybe not sort of one and done, but perhaps more expensive treatments. I mean, do you think that's also carried across to the drugs that you're marketing?
Well, what we find is that when you're launching a new drug in the US, that insurance companies don't want to talk to you until you've built a pile of prescriptions, so that then they know that doctors want to prescribe, at which point they want their piece of the pie to put you on formulary and help you convert a prescription to an active patient. So they push the onus back on you to go and show us that you can succeed first, and then we'll talk to you. Such lovely people. We deal with this every single day. We're dealing with it in multiple sclerosis right now. And so what I worry is because one and done treatments, or depending on whether you mess at the DNA level or the RNA level in the future of medicine that you're at the forefront of, all I worry about is that the insurance companies likewise push you away and say show success first, and then we'll actually change the model that we're prepared to work with as an insurance company. And I worry that will slow you down. I hope it doesn't, but that's what we see day in, day out at the moment, that you have to prove success first and then people will want to jump on your train.
Sarah, I mean, obviously perhaps not so relevant to you currently, but is that something that you're aware of, that you're starting to think about? I mean,
yeah, I mean, I think there's real challenges in diabetes there around the cost. Obviously, the cost generally to healthcare systems, it's just under $1 trillion now worldwide, but also I think what people, unless you are somebody, or you're close to somebody with diabetes, which a lot of people are now, is there's a lot of self-pay actually requirements for if you want to access the best treatments in diabetes today and the devices that come along with that. So insulin pumps is a good example of that. You may think in the UK, well, we've got the NHS, so of course if you're on an insulin pump it's all paid for, so but the pump itself might be paid for, maybe, but often the ancillary items that you need aren't, and that could be £2,000 a year, and then it's around that requirement for that individual to manage their disease 24/7, which is quite complicated. There's quite a lot of calculations to be made for that individual. So I think, as Jess was saying, there is a disparity there against access to best treatments for people with diabetes and that affordability. But also, in the sort of more deprived areas, the actual ability to self-manage the disease leads to, disproportionately worse outcomes for more deprived areas. So, if you're having to pay £2,000, £3,000, sometimes up to £5,000 a year, add on to your treatment, if you're earning £20,000 a year, that's just not viable at all. So, you know, there's a lot of work to be done in terms of access to care, access to specialist endocrinologists in that area, but also, you know, how do you provide that better treatment in a holistic way? It's a similar way that actually you'll improve outcomes for that patient, keep them out of the hospital setting, and reduce the healthcare burden ultimately. But it's got to be funded from day one.
Yeah. And I guess there you've got risks of amputations of legs and...
Yeah, I mean, there's, you know, some terrible stats in diabetes. So there's 537 million people living with diabetes now worldwide. There's a major limb amputation every 30 seconds directly due to diabetes. That's in the UK as well. There's 185 amputations a week in the UK. And I think, you know, if we talk about some of the other chronic diseases, if you have diabetes, 70% of people with diabetes die from cardiovascular disease. So it's the chronic conditions that come with, and it's simply managing blood glucose. It's something we should be able to manage better.
And presumably those mortality morbidity stats are higher in lower socioeconomic groups, is that?
Yeah, I mean, you know, 2.5 times more likely to have type 2 diabetes if you're in lower socioeconomic group there. And it's because of the social aspects and behavioural aspects of that and lifestyle. So it goes hand in hand with obesity pandemic there. So I don't know, people know now we're nearly 1/3 of the UK population are classified as obese, 2/3 are overweight, and this leads to a high prevalence of type 2 diabetes there. And you see it, I mean, they characterise it perhaps slightly better in the US. It's called the diabetes belt. It's in the southern states, and it's in those states as well that they don't have access to insurance generally, so they don't have access to treatment, just simple basic access to things like insulin. They'll share insulin among families, and obviously that's going to, you know, reduce your outcomes there.
Yeah, and that's correlated to the cardiovascular events and to the amputations, etc.
Exactly.
Wonder if there's any questions from the audience. There's some behind you. Just wait for the microphone.
I can shout.
I think we ought to pick it up.
Asafar Medmirzam Therapeutic. Just wanted to ask if you've done the health economics. I mean, we've been talking about health inequalities for each of the treatment. What's the health economics piece? And that's usually missing, especially for unmet medical need conditions.
I can answer that from the therapies we sell. We improve existing drugs, so by definition we have competition in everything we do. The thing we've improved upon, we don't sell a medicine for more than the benchmark price that's already there. It's either at or less than what the reference point is in the market. So yes, we do our healthcare economics and so on, but we feel good about offering services wrapping around therapies and not increasing price.
Perhaps just to add, yeah, it's a great question, by the way. We recently had an independent health economic study looking on the short-term benefits from deploying our service in a region to reduce the number of people that go on to need acute mental health care. So we're looking at short-term benefits, not lifetime achievement, those things. And we have basically a 3.5 to 1 cost saving in the UK. We've done a preliminary review of that same study in the US, and it's a 12 to 1 cost saving.
Maybe I'll add a little bit as the guy up here that potentially is going to be bringing the 300,000-400,000 therapy to the market. There's no doubt, if you cure progressive multiple sclerosis, if you cure type 1 diabetes for life, for all of those conditions, you save a healthcare system an enormous amount of money, even at that cost. So for the health economic perspective, and we made a very clear point of when we were deciding which autoimmune or which inflammatory conditions we'd look at to research, we ensured that the disease states that we were tackling were ones where there would be a health economic benefit. Health economic benefit is something that the NHS and payers understand and really want to see delivered. But going back to my previous point, unless the system of how payment is made, the current wave, and there's over 1,000 or so advanced therapies treatments that are coming down the pipe. So it's real. There's a wave of this stuff coming to healthcare systems all over the world. Unless the systems work out how to pay for it, health economics aren't going to be the challenge. It's actually going to be just a mechanistics and a flow of cash that governments and payers need to understand.
I mean, I'll probably add one comment to that from the health economics. I mean, the answer for us would be yes. We've looked at that quite closely, and I think, you know, you have to look at that. If you want to see a therapy come to market and you expect to see it reimbursed or covered by insurance in the US, etc., then you've got to design into your clinical studies quite early that you're looking at the right primary outcomes and you're generating the data that's going to, you know, support your health economic argument. And I think that's, you know, historically, if we look at pharma and pharma companies and smaller biotechs, you know, that was often seen as something, well, we'll partner that later and large pharma will do that. So my advice for people in the room here at the earlier stages is do that work, because actually you'll need it for only licensing and partnering as well. And certainly, and quite rightly, if you expect to see a therapy on the market and reimburse, it's got to bring benefit.
And another question here from the tablet, and maybe one for you, Jess, probably equally could have been applied to the funding panel earlier on. What actions or changes could healthcare research and innovation funders be making to address health inequalities? Is there a role they can play here?
I think, yeah, from a research perspective, like more is always better, but that obviously comes at a cost. So it's about right-sizing the research mandate to make sure that you're solving for the desired outcome, which is usually approval on a big enough population set that you can convince, you know, the go-to-market strategy and the therapeutic response is correct. So I think designing it with the outcome in mind and then financing it as well with the outcome in mind is probably the main learning. We've spoken a lot about inequalities on the discussion today, but we always look at the underlying data set to understand what's the diversity of the underlying data as part of the research brief that's been completed. That's not just from a gender perspective, but from an ethnicity and broader demographic background as well. There's a huge challenge within a lot of the AI models that we look at in terms of sort of like data biases and data groupings. So yeah, sort of an adjacent point, but hopefully that's helpful.
Yeah, yeah.
I mean, I'll just add just a greater and greater focus on the S in E, S and G, and what companies should be doing, and the wider stakeholders, including potential financiers of those companies, to help solve economics and, you know, giving drug to people who can't afford it, for example, so they're not just part of the child mortality statistics wherever they may be. There's a lot that anyone can do, and if that's part of a slide in a financing deck, that's a good thing.
Maybe I'll add a couple of points. One is, yeah, I kind of break down funding into two groups. The funding that's supporting therapeutics coming through, and I think any funding, whether it's VC or whether it's government funding, etc., needs to really think about the value for money of the intervention that is being invested in, make sure that there is true value for money. So that's one half. And the other half I completely separate, which is the investment that goes on into basic science. A lot of the investment that goes on into basic science I don't think necessarily should be tied back into what is this going to, in the near term, generate to address either health inequalities. Because if we don't do that, then many of the advances that we have in cell and gene therapy that now you can judge to say, are you going to provide value for money, wouldn't exist. I think it's really important that both continue.
I'll take another question, which historically pharma has prices to maximise profit over users. What pricing strategies has the panel espoused to balance access with provision? Ouch.
Maybe I'll start on that. I'll just say my background is, before I got into biotech, I was in pharma for many, many years, running commercial businesses internationally and in the US and in the UK. And there, I think, has been a period in pharma where pharma has maximised profits. It's their job in part to maximise profits, and hasn't always done it in the most responsible manner. And there have been companies that everyone can point to say that there have been profit gouging, etc., which is not great. I don't think it has helped enormously. I think there is a different sense of responsibility in pharma these days. I don't think it's happening in the same way. I think governments are doing a better job of holding pharma to account when they see things are done that are excessive and are abusive. But I think at the end of the day, the entire system has a responsibility to ensure that there is fair pricing. Now, fair pricing doesn't necessarily always have to mean cheap pricing. Fair pricing has to be something that delivers huge value to all the stakeholders, from the patient to the physician to the hospitals, the healthcare infrastructure and the governments right the way through. And going back to your question around health economics, if you can justify that, if you can benchmark it against other interventions, then I think it's the responsible path forward. Our job is all to provide value when the government is still, in every country, the single largest payer.
Yes, James, that's probably central to your business in terms of how you think about things.
I just think I'm only going to attract the best employees if they want to be part of a story where we're helping people no matter who they are. So I think from a management perspective, all of the vectors are pointing in the same direction. You should be helping people who aren't as lucky as you, who can't pay. I get data, inordinate amount of data on our business. I know precisely how many new prescriptions I got in the US yesterday. But the nicest data is, when I get a letter from a Bangladeshi family talking about their son going to school for the first day, which wouldn't otherwise have happened without a drug that we ship to them. So telling those stories, it's important in and of itself, but it also helps you get momentum, be that with your own team and as you interface externally. So it's all pointing in the same way.
And to the last question here, actually, I mean, again, probably goes back to you, James, is chronic and rare conditions often present in childhood, generally a poorly served demographic in terms of healthcare products and services. How can this change?
I think you all know the stats. The number of rare diseases that are untreated is going up because they're getting stratified and understood faster than treatments are getting approved to treat them. So, I just, it's just what we should do. There's no other answer. It's just right that we should help. I don't know what more to say.
No. And in terms of more, say, sort of mental health well-being issues, is that something that a platform-based approach you think is well suited to address?
75% of lifelong mental health issues are established by age 25. So if you want to tackle this, you've got to tackle this generationally, and you have to start young. And because there's not enough therapists in the world to treat with the level of demand, you have to start focusing on early intervention and prevention. And so the more that you can move this upstream, the better for everyone, the better for individuals, the better also for the system and for the cost as well. And I think, for those of you that saw Keir Starmer's talk about making the NHS fit for the future, the narrative is very similar to what the NHS is looking to do. If you look at the Hewlett report recently that came out, we have to have a healthcare system focus on health, not illness. And so the more that we can push upstream into early intervention, obviously not applicable in all cases, but the more that we can do that, the more that we can be a healthier nation. We can reduce the cost of expensive treatment downstream. And if we can do that in those early years as well, then we can get our kids ready for the future.
Probably got time for one more question from the audience.
Thank you. I'm Steve Oldfield. Until recently, I was Chief Commercial Officer at the Department of Health and Director General for Life Sciences, and before that in a career in pharma. I just wanted to come back to this question of cost effectiveness versus affordability, which is, of course, an age-old dilemma that industry has struggled with. Given that we had a government minister here today and he evoked the spirit of the NHS, do you feel, at least in the UK, that the right people are focusing on solving that question and are doing enough to be able to help you get some of those treatments, which are going to challenge payers and going to challenge healthcare systems, whether they be insurance funded or government funded, taxpayer funded? What more can you can government and the NHS be doing, and what message would you be giving to them if you could?
Maybe I'll go first. So I think, partly if you look at where the innovation's coming from in the UK, quite often it's coming from small biotech companies with limited kind of resource perhaps and expertise in that area. So I think, something very practical that could be done is bringing those right experts and key stakeholders around the table with many of the innovative companies that are in the UK today and talking through. And so to understand, how does the system work today? What data is required? What do we actually mean by cost effectiveness? How does the system work in reality? And how can companies bake that in to the development programs, the data that they're generating, so that at the end of the day, when you get to the other end of the life cycle, you're getting towards commercializing a product, that you have got the evidence to support that cost effective, and there's an understanding on both sides of that table how that really works. And it's much more holistic cost effectiveness, not just this is the cost of this particular medicine. I think that would be really helpful as a kind of education piece for everybody.
So when I sort of think about the kind of thing that we do, and what our mandate is from the people that have given us the money to try and develop these drugs, our mandate isn't actually to go and solve a payer model today. Our mandate is to demonstrate that you've got efficacy, that you've got safety, so you can move forward through the phases of development and hopefully get to the stage that you can bring those drugs to patients. But of course, I've spoken a little bit about this sort of tsunami of products that are coming through that the system's not set up for. One of the things that we did, and we announced last week actually, we just signed a deal with AstraZeneca. One of the reasons we've signed a deal with AstraZeneca to broaden the number of products that we can bring through with our platform is to make sure that you have someone of that magnitude with the ability with payers to start preparing the way for the future. There's no way a small number of biotechs are going to be able to change that. You need the weight of large institutions like AstraZeneca, like Novartis, like some of the bigger companies out there to make that change happen, because they're part of the institution, that pharma NHS model that exists, and they've got to be part of helping to break it. And I think government listens much more to that group than quite often they do the small innovating companies. So it is the whole ecosystem that people have spoken about this morning. But I think without the big companies, it won't happen.
Tim, James, any?
I can't comment because our service is highly affordable.
Okay. Well, listen, thank you very much.
And there's yet another entirely different discussion which could go on and on and on. So, our final private company presentation. Glenn, where are you? Ah, right here. And hopefully Ash is there too. Over to you.
Thanks, Ash. And thanks very much to the Exchange to give us this opportunity to share a bit about TowerX today. I do note that you've put us right between the audience and lunch, so we'll try and keep this brief. TowerX is one of the many companies trying to solve the mystery of Alzheimer's disease. What makes us unique is that we remain solely focused on tau pathology and looking at the aggregation of tau as a therapeutic target for the disease. We are very, very deep-rooted in science. Professor Claude Wishock, who is here today, actually founded in his discoveries from the mid-80s in the role of tau in Alzheimer's disease, and we've been working in that research ever since. We were incorporated in Singapore in 2002, that's where the seed capital came from. And now we're about 70 people renting office space in a bus depot in Aberdeen, and about 42 people working through the University of Aberdeen continuing our research. We're also rooted in deep capital. Up until 21, we'd raised $700 million. We did a rights issue at the end of 21, and that was oversubscribed, raising our target of 64. Those rights came with warrants, exercisable when we released the initial data from our phase 3 clinical trial. They were over 99% exercised, raising another $119 million. So, rooted in science, rooted in a very loyal shareholder base. The numbers are scary, tragically so. Estimated the cost of treating dementia, the cost to society of dementia in 2020 was $1 trillion, set to double by the end of the decade. It's the main killer in the UK, 66,000 deaths last year, 5,000 more than the year before. And globally, 50 million sufferers of dementia in 2020, set to more than triple in the next 30 years. But perhaps the scariest number is the one on the bottom here, that it's estimated that 500 million people globally are currently living with clinical measurable early stages of progressive tau pathology. And being over 50, there's more than a 50% chance that I'm one of them. But we have an answer. We've developed HMTM, which is a tau aggregation inhibitor. And why tau? I mean, tau, in brief terms, for anyone who wants the deep science, Claude would be delighted to take you through our scientific journey after the presentation. But tau protein is essential for healthy neural function. It stabilizes the microtubules in the neurons. But with aging, waste products in the brain can cause tau to both misfold and aggregate. And it's this aggregated tau that causes the death of neurons. And that pathology is well recognized in the field of Alzheimer's, and it's accepted that tau pathology correlates to disease progression. And there is not one single approved therapeutic to address this. HMTM is designed and does prevent the aggregation of tau and stops these aggregated tangles forming. So we're the only company that have done late-stage phase 3 clinical trials in tau, and HMTM could be the first available disease-modifying treatment for Alzheimer's, tackling tau. The field has followed the amyloid hypothesis for decades, over $25 billion spent on amyloid trials, some drugs coming to market, but they remain controversial, both due to the price prevalent to the last panel conversation on the two therapeutics which have been approved, but also on the side effects of those drugs which have been well reported. More and more companies are investing in tau, and even these companies that are seeking to take amyloid treatments to market, they're measuring the impact of their drug on tau because of the recognition that tau plays such a major role in Alzheimer's. And who knows what the answer is at the end of the day. They could provide part of the solution along with tau. And what does the space look like? What does it look like for drugs coming to market? 2 treatments approved in the US. Likely that Lilly will launch their treatment next year and Alzheimer's the year after. All amyloid. In that near-term space, nothing in tau. So the need remains. We've just completed our 4th phase 3 trial, hence the amount of fundraising, and it's an expensive business to get this far. 3 trials in Alzheimer's and 1 in frontotemporal dementia. We did a randomized, double-blind, placebo-controlled trial for 12 months, safety and efficacy in Alzheimer's sufferers, monotherapy, no other treatments, or a washout from symptomatic treatments, followed by a 12-month open-label study. We announced the results of the closed-label part of the trial on the 30th of November, or St Andrew's Day last year, which is rather appropriate for a Scottish big company, at the CTAD conference. We locked the database last week on our blinded data. That'll be available later this month. I'll give a flavour, but our commercial director is a lawyer, which is another word for caveat, so I'll be very careful what I say at this point in time. We will be releasing our biomarker data at the Alzheimer's Association International Conference starting on the 13th of July. I can't say much about that today. There'll be a press release out next month, but we are very excited about it. It has indeed shaped our regulatory strategy in the US. So very briefly, what do we see? We considered people right across the spectrum from early Alzheimer's or mild cognitive impairment, mild and moderate Alzheimer's, and we considered it as one patient population for this trial. What we actually saw was a variance between MCI and mild and moderate Alzheimer's. This is all the results shown on one graph on the right-hand side, showing against the recognized scale for cognitive decline on the left-hand side what one would expect to see from a matched population from the real-world evidence and what our combined results show. If I break up those results, if I look at MCI, no decline for the first year, 18 months, 2 years. No decline in cognition in the MCI population, a slight improvement, a levelling off. And we've got brain atrophy to the normal aging levels for MCI, and no drug has done that before. In the ADE population, a decline less than one would expect and a stabilisation period. And brain atrophy reduced to levels which are significantly less than the matched population from the real-world evidence. our biomarker data supports the results, and it supports what we had hoped, that we have a drug which is both symptomatically beneficial and disease modifying. And going back to what's been mentioned many times before as well, safety. It's a very benign drug. It's a very benign safety profile. We've tested it now in about 3,000 people. About 2,000 of those people were at doses which are an order of magnitude higher than what we now believe to be the therapeutically optimal dose. Not a single case of amyloid-related imaging abnormalities or ARIAs, as the press has talked about a lot recently. So benign. So we have something that's safe and something that's effective. What does this mean for our timeline? We were awarded, question earlier, the Innovation Passport in May last year. We had the first ILAP meeting with our earlier results and our biomarker results last month. From that meeting, and I must say, we found the MHRA incredibly collaborative and supportive, along with NICE and SMC, who attended there as well, and helping us shape our thinking as how we do the submission. So our target is to submit by the end of this year in the UK. The target is also to submit an NDA within the US by the end of the year, seeking priority review, surrogate endpoint with our biomarker data. So where do we grow from here? 3 objectives, rather simple. Hoping to obtain marketing authorization in the US. It's likely to be faster there. Sometime between 3Q next year and 1Q year after. Secondly, to do that market shaping and stakeholder alignment, that commercialization work that would allow us to launch an approval. I think, as the last 2 panels have said, incredibly complex, expensive work. We've been working on this for 2 years now with a contract commercialization organization. So we want to be ready to launch when we get approval. And thirdly, to raise additional launch financing to support the commercial launch, with a target to break even within the first year of launch. And from substantial research we've done on our revenue profiles, we believe that's a very achievable, even taking a pessimistic curve, a very achievable target. Focused on Alzheimer's, but we do see this as a platform. I said earlier, we've done a 4th trial, frontotemporal dementia, very similar results to Alzheimer's. CTE is a tauopathy. We've had approaches from 2 organizations specializing in CTE, wishing to run trials with our drugs. Parkinson's, Huntington's, Lewy body dementias. They're all related to protein aggregation. We've done a lot of early work in these indications as well. We're patent protected. We have about 950 patents across the board. So we've been low profile despite the fundraising. We're now raising our heads above the parapet, and we aim to launch a blockbuster from a bus depot in Aberdeen. Thank you for your interest.
So thank you for the presentation. Any questions from the audience? One in the back there.
Both with beta amyloid and with tau, the aggregation or the plaque formation, whatever, has generally already occurred by the time patients become symptomatic. So isn't it right that unless there's much earlier diagnosis and screening, the benefit to patients in the real world is only ever going to be modest with any of these drugs?
Not wholly, no. I think that is changing. I mean, it is true, the pathology starts decades before the symptoms are manifest. So a huge amount of investment into diagnostics, and that's really important. We have a joint venture with Genting, the Malaysian conglomerate, to do diagnostics. Tablet-based diagnostics, which a test people can do at home, but also with the University of Aberdeen, blood-based diagnostics. What we saw from the MCI results, no decline, because we're catching the disease early. MCI is detectable now with the right diagnostics, so getting in early is hugely important. But even with moderate Alzheimer's disease, we saw a significant reduction in cognitive decline and brain atrophy. Not to the extent of one gets it at MCI, but of course the holy grail is to get when the pathology exists decades before, and then hopefully we get at the point where one would never actually witness the symptoms.
Any more? Over there in front.
Hello, I'm Ruth McKernan, Dementia Discovery Fund and various other things. So I'm really interested, based on the previous panel, about patient stratification, and if this is a mechanism that works for tau only. Did you measure tau in the patients that went into the study? Can you see changes in tau? How do we pick the right patients for your treatment?
Okay, we had many screening criteria. What we did screen for going into the trial was people who were amyloid positive, because when we were planning the trial, writing the protocol, we had to use that, or a number of KRs would not accept Alzheimer's disease if there wasn't positive amyloid. We didn't actually screen for tau going into the disease. What the biomarker shows, and it is a blood-based biomarker measuring one of the tau elements, and we saw very, very distinctive difference between those on control and those on the therapy. With those blood-based biomarkers, which is emerging at the moment, really in the last 2 years, the field has grown tremendously. I believe that will be the diagnostic area where one can predict the disease stage and the disease progression from certain tau-based biomarkers. And that would probably be, well, that would certainly be a far more effective screening mechanism than the current patient pathway, which really does need significantly rewritten. Well, I was going to say here, but globally.
One last question. Over there, thank you.
Yeah, hi Glenn, great presentation. I'm Richard Hebden, Director of Health and Life Sciences at Innovate UK. I'm just curious, thank you, hi. Just curious, have you benefited at all from public support funding for research and innovation? If not, why not?
No, zero. I think what we have been is very successful in the private markets, particularly in Southeast Asia, at raising the capital. And I think the honest answer was we've been a bit lazy over the period in going after other opportunities. And in retrospect, we were looking the other day about a forward plan, University of Aberdeen. We've invested $95 million in the University of Aberdeen as our key scientific partners. And we could have made use of opportunities before now that could have reduced that. And we were unfortunately naive to that. So, huge lesson learned.
I think we'll leave it there ahead of lunch. Thank you all so much. Thank you.
Thank you.
Another great British, or should I say Scottish, success story from a bus station. You heard it here first. Almost there. You've been very patient. Thank you. And it wouldn't be this event without words from someone who's always got something to say. Steve.
Tim, thank you. Steve Bates, I'm the Chief Executive of the UK Bioindustry Association, the trade association for innovative life science companies. If you don't know us, over 500 members spanning all stages of the life science development pathway and much of the investment community and rest of the community that supports us. So in closing remarks, I'm going to give you one fact, hopefully some advice, and a single message. And I'll start with the message. The message that I hope you'll share with me is that whilst NASDAQ is asleep, London is waking up. It went down well at Bio last week, so why do I think this is appetite and right for this year? So I think we're seeing some organic alignment happening around this. First of all, we've got pension funds who know change is coming from their regulators and have had the shock that investing in leveraged gilts is not entirely risk-free. So that is one thing that has changed. Second, you heard it this morning from the Minister, the government agenda is sophisticated and engaged on these matters. A government needs growth in the economy and are looking for very fast ways of doing this. And importantly, the Labour Party, if they were to form a future government, also understand this agenda. So there's alignment and I think continuity in the political world around growth and seeing this as a growth area. And also, I think, sorry, James, JP Morgan are getting some competition. New competition this year in HSBC Innovation. Silicon Valley Bank UK obviously are now transformed into HSBC Innovation, we've seen this week, and are really interested in supporting from a global company from a UK base, innovation and the innovation economy as part of their strategy. So we've got a significant new player on the scene from our perspective. The BIA is playing a key role behind the scenes on many of these things. A couple of things that are probably more visible. You'll have seen that Dan Mahoney, who's the chair of the BIA, at the present time from Polar Capital is also the UK's life science investment and scale-up envoy, so pulling a lot of those pieces together. I've been at this for a while, thanks Tim, and I get the sense that this is really coming together at the moment. Things are moving. I mean, we've seen, you can see the stock exchange are doing things with Innovate UK. JP Morgan got a great event coming up in a couple of weeks' time. Jefferies Week later in the year is really buzzing. You look at all the stuff that's coming around here. The BBB are active and starting to deploy lots of the things that were talked about in the last couple of years. So from my perspective, where I've been at this for a while, I think we're really seeing it coming together in 2023. Talked about my message, my fact. So it's from the BBB Small Business Equity Tracker out this morning, a great read. Once you've read the Boris Johnson resignation stuff, then this should be second on your list. The fact from that document, the US invests 0.26 of their GDP in life science venture capital. The UK invests 0.15% of our GDP, smaller scale obviously. So the US invests 60% more of their treasure than the UK into life science venture. It's a very small amount of GDP, but if we could transform that to be at the US level, I think we'd have a transformation in this sector. Tiny percentage numbers, big impact. So I think this is the year that it's going to move, because we've seen the great companies. There is a wave of capital coming. And those of you who are surfers know that you need to be ready before the wave hits. I was lucky enough to survive the 2003 tsunami. I'll tell you that story over lunch. You need to be ready before the wave hits. This is the year to get ready for that if you're going to take full opportunity of what is coming. Make sure your part of the ecosystem is scaled. This is my piece of advice. Make sure you're scaled so that you're able to do it. You will not be able to do it fast enough when this happens in about 6 months' time to a year's time. This is happening now, and having been here today, you've got the inside skinny. You've got the 6-month lead time. You're seeing the wave coming. This is why we need to go now. And you're at the intersection of two great ecosystems. You think about it, there's a life science innovation ecosystem, which is going great guns, proven to the world from the UK, from COVID and all the work that we did there. And we've got this changing, more change now, I think, happening in the investment innovation ecosystem, which is just happening. And I can see that that is what's moving. And if you think about where the great feeding grounds are, where ecosystems meet, I like to think of the underground reef, or the underwater reef, meeting the vents that come from the deep ocean. That's where the best feeding grounds are, where the two ecosystems meet, and that's where we are today. So back to my message. Please, if you believe what I've said and you can see the opportunity, take the message everywhere. Whilst Nasdaq is asleep, London is waking up. Thank you.
Not quite sure how you follow that. Look, my job now is very simple. It's been a tremendous morning, huge amount of variety, both in terms of subject matter, the private companies. I think it's been tremendous. In a sense, I just wish it was a bit longer. But maybe we can do that next time. But what I do want to do is thank you all very much for coming, and also for the many contributions that have been made, not least of all by our sponsors, and also the many people behind the scenes who actually make events like this happen as well. I have to say that, I mean, in terms of what Steve just said, from an exchange perspective, I would entirely agree. You know, we know what the economic situation is like globally and specifically here. We know there's a lot of capital about and it's being very choosy. But I think there is a sense that things are just starting to move, albeit hesitantly. And on the one hand, of course, a lot of us make our livings out of directly or indirectly helping fund companies and helping them to grow. But equally, I think it's incumbent on all of us to spread that sort of, not in a false bottom way, but to spread that positive message, if you like, in terms of how we can collectively take things forward. So certainly anything in terms of exchange matters or your dreams for the future as owning companies and so on, we'd love to talk, as would, I know, the sponsors. But all that remains now is to say thank you once more, and also it's lunchtime at last. Thank you.